come to smoke cannabis. Doctor say make a pop one of this. Make me fly like say I'm Aladdin. Come bring some kind melodies. Oh mommy myself no do pass like this. So many things inside of my jeans. I slide down DBTs, DBTs.
Breakout room 3, mic check. 1 2 1 2 check. 1 2 breakout room 3. Can you hear me? Check 1 2 check. 1 2 check. Check check. Check 1 2 1 2 mic check 1 2. Iko na tea? Aya, wacha tuangalie. Ama hata kwa menje probably iko juu.
Check 1
Check 1 2.
sound on 2 check.
Check again. Check 1 2. Check 1 2 3 4 5 6 7 8.
Check 1 2 1 2. Check 1 2. Check 1 2. Check 1 2.
Check 1 2. Nimepunguza volume. Sijui kama unaisikia bado. Check 1 2. This is a sound check. If you can hear me 1 2. I cracks in the check 1 2. Check. Ateza skiza check 1 2. Okay. Sawa.
Every day, people juggle so
morning, everyone. How are you all? You're good? I thought I was among the tallest people in the room. I've actually realized I'm taller. Good to have you all. You can wave at me, probably. Yeah, thank you. I'm actually taller. You've all had your breakfast? Anyone who have missed out on breakfast, probably. Thank you. So we are all ready. The energy is, we have the energy for the day. So thank you so much to our guests, John, Grace, and everyone else in the room. Thank you so much for making this possible. Actually, you can turn to your neighbor and tell them congratulations for being here. So I know it's an exciting day, and we are looking forward to having the best out of all the planned activities of the day. And I know we are all enthusiastic and energetic for the same. We are quite good on our time, so I at this point I want actually to invite John. I think I didn't introduce my name. Fine, I am James, and I will be your moderator for the day. And I know we'll be having a very exciting moment and a very exciting time interacting and hearing from each and every one of us. So okay, is it okay now? Thank you. So I'll be occasionally here on this stage every now and then, but at the moment I want to invite our president for the CFA East Africa to come and make his remarks. So John, please welcome. You can give him a word of applause.
Good morning, everyone. I'm just wondering, when James says he's one of the tallest people in the room, where does that leave some of us? As introduced, my name is John Okumu. I'm the president of the CFA Society East Africa, and it's a pleasure to be here, opening the Research Challenge this year. Okay. So I'll just have a short presentation for us. Thank you. So welcome everyone, ladies and gentlemen, to the Research Challenge 2026, hosted by the CFA Society East Africa. A bit about the Research Challenge, a bit about the society, and a bit about the institute. So the Research Challenge is hosted by the CFA Society East Africa, which is a sub-society under the CFA Institute. The CFA Institute is a global association of investment professionals that sets standards for professional excellence and credentials. The organization is a champion for ethical behavior in investment markets and a respected source of knowledge in the global financial community. The Institute, through its program, which is a CFA exam, is widely considered the gold standard in investment credentialing and is a leading voice on issues of fairness, efficiency, and investor protection. Now that is the Institute, which is the global mother body, if you can think of it like that. And then the society, so there's around 144 societies globally, East African Society being one of them, and the society is the boots on the ground of the Institute. So the Institute cannot be everything everywhere all at once. It needs the societies to do its work on the ground. Now a bit about the Research Challenge. So the Research Challenge is, as you can see on screen, it's a competition between colleges and teams of students where you have at least 2 different universities providing teams of between 3 and 5 students where you participate in research around an investment or a listed company. And it's meant to promote research skills, analysis, report writing, but it's also not meant to be an investment thesis. So I'm sure all of you have done your analysis already on a subject company, which we'll talk to later. It's meant to promote the skills that we expect that you'll be able to apply once you get into the job market. So how it works, the challenge itself is facilitated by volunteers, board members such as myself, the society manager Grace, the society administrator Priscilla as well. So you have universities coming up with teams of between 3 and 5 students. Each team works together with a mentor to do some research and prepare an equity research report on a publicly traded company, in this case NMB Bank of Tanzania. And then the findings are evaluated by a panel of judges seated in front of you here, who will introduce themselves a bit later. And then this is the Kenya chapter of the Research Challenge. The East Africa Society has different chapters, or different, we cover different countries: Kenya, Uganda, Tanzania, Rwanda, and now Ethiopia. So there was a research challenge for each of those countries. We call that local level, and then you move to regional level. So there'll be an East Africa final, and then there'll be an Africa final, EMEA final, emerging market, Europe, Middle East, India, and Europe, Middle East, India, and Asia. India and Africa final, and then a global final right at the top. So what are the benefits of the Research Challenge? Obviously, over and above the prize money, you get real-life learning experience as an equity analyst. You get in-depth training in company analysis, financial, qualitative, and quantitative. You get to put this on your CV. So once you're applying for jobs in the investments market, this is a good experience to have on your CV. You get to work with industry mentors. So over and above networking with people in the industry, you get real-life insights from people in industry. And for the winning teams, there are internship opportunities as well. Now, these are some of the rules for the challenge today. This is meant to be very fair and almost anonymous. So as you present, the judges shouldn't know this is University A presenting, this is University B presenting. You'll be assigned a letter that you'll be using throughout the rest of the day as you present. Teams cannot use props in your presentations. Only student team members can participate, so we don't expect any faculty to be participating in this. Each team will be given 10 minutes to present. However, there'll be an additional 5 minutes for Q&A posed by the judges. There'll be a timekeeper in each of the rooms, giving you time warnings. And the timekeeper will also announce when time has expired during the Q&A session. Now your research, your evaluation will be out of 100, and the scoring is divided into what you see here: financial analysis, valuation, ESG considerations, which is obviously quite topical in investments, how you present, so your articulation and your presentation, how you put through your points to the judging panel, how you answer the questions, and also the involvement of the team. So if your team is 5 people, we don't expect that only 1 or 2 will be presenting. If you want to score highly, you want a good team dynamic where every team member is involved. So the challenge today will be over a couple of rounds, given the number of teams. So there'll be 3 rounds. The first round is all the teams. Then the judges will decide the top 5 that will present again. After that, a top 3 will be selected that presents again. And after that, the final winner for the Kenya chapter will be selected. As I've mentioned, so this is a local, pardon the the writing there. It's probably AI. Tough crowd. Yeah, I don't know what's happening there. But as I've mentioned, so this is the local finals today. And then we'll go up to sub-regional finals, regional finals, global finals for the winners. The global finals, I think, are actually in person in the US. So if you do well enough and you make it all the way there, it's an opportunity to travel. Okay, so that's just the dates for the finals. So the regional semifinals will be in April 2026, both the regional semifinals and the regional finals. And the global finals will be in May of this year. Okay, so these are the teams that are participating today for the benefit of everyone. Obviously, this is just for knowledge now, but as you present, you won't know which team is presenting. But you also have our faculty advisors and our mentors, some of whom I believe are in the room. And you know, at this point, I'd just like to thank the industry mentors, because a lot of this would not be possible without their input, and I'm sure the teams that will be presenting today can attest to that. Okay, so this is the program for the day. We're running a bit behind on time, but I think we should be able to catch up on some time. But we aim to end by, let's call it 4 p.m. today. And then this is just some statistics around the Global Research Challenge participation in 2025. There's more than 7,000 students being facilitated by more than 2,500 volunteers. I'd mentioned 140 societies. It's actually more than that. You know, covering over 1,000 universities in more than 100 countries. Now, for the research challenge to work the way it has, you know, we couldn't do it without the help of our partners. And these partners, as you can see, are across East Africa, given that this is a CFA Society East Africa Research Challenge. You'll see NMB there, which is our subject company, but all these are our partners and our sponsors that make the event come to life. Last but not least, as you know, NMB, a listed bank in Tanzania, one of the largest, depending on where your affiliations lie, is our subject company for this research challenge. And with that, I'd like to thank you all for coming today. I'd like to wish all the teams presenting good luck, and may the best team win. Thank you.
Thank you, John. Let's appreciate John once more. And thank you for that amazing presentation and your excellent leadership. John has actually also made my work a little bit easier. I wanted to also take us through the program, which he already has. So I hope we've taken note of that. So I'm just going to mention a few additional couple of things before we actually now get live into the program. First, as John has said about the our introduction, we are comprised of universities and so on and so forth. So once you will be introducing yourself, you are allowed to use your name and your assigned team name, but not the university name. So I understand, should you make a mistake and introduce yourself with the university name, that is penalizable, and we're looking forward to being at the finals in the US, as John has said. So you don't want to make a mistake of anything that can reduce your marks, right? So let's just take note of that. you are not allowed to use your, or rather to introduce yourself by the university name. For purposes of rooms, after here we will be breaking into the holding rooms. I mean, or rather the holding rooms. Then after that we'll go into the breakout rooms, which I need to give how that distribution will be looking like. So this main auditorium will be split into two. We'll be having two panelists going on, and then we have another breakout rooms on my far left, which is your right. Which is your right actually, but though depending with where you are seated. So this room 1 and room 2 will be comprised of, particularly room 1, I've said room 1 is the main auditorium that will be split into two, will be comprised of team A, D, G, J, and M. Please take note of that. So if you belong to team A, D, G, J, and M, you will be at room 1. Room 2, which is part of the same auditorium, will be comprised of team B, E, H, K, and N. Then the farthest last breakout room, which is on my far left, as I've said, will be comprised of team C, F, I, and L. So please take note of that so that you know where you will belong for your presentations and so on. But then once you're done with your presentation, you can actually, you remain in the room within which you've been assigned. Again, before we proceed to our breakout rooms, the team leaders for all those assigned rooms, you will pass by that desk to confirm your slides. So please make do. The team leaders for all those particular teams that I've mentioned, pass by at the far back there to just confirm your slides. I hope you've taken note of that. And just a polite reminder on your introduction, please refrain from introducing yourself by the university from where you come from. So ladies and gentlemen, again, we wish you well. May the best team win. So don't be nervous, you need to be very energetic. Don't be nervous. Our judges here are very friendly judges, so don't be nervous. When they ask you a question, they're not trying to make you feel as if you're not prepared. So just answer it boldly and with a lot of enthusiasm. And at this point in time, I want actually our judges to introduce themselves so that as they will be asking you, or rather as you'll be interacting with them, you actually know who you are dealing with. So our judges, thank you so much. I don't know whether you mind to come on the stage or you introduce yourself from wherever you are. But I think if you could join me on the stage, that would be better. Let's appreciate our judges as they come forward. So this is a list of our judges. I see one coming in. Let's celebrate her. She joins the team. Excellent. So I'll hand over the mic to the first judge, and then you'll pass it on, and then I'll pick from the farthest end. Thank you.
Good morning, everyone. My name is Miriam Duta. So I work for Algam Africa Capital. So the firm has different business lines. One of them, the most relevant to this challenge, is the research and analytics side, where we do reports and sell them to investment banks that don't have the capacity to do their own research. So apart from research, we also do corporate advisory. We have a bit of capital raising and climate finance.
Hi, good morning, everyone. I'm Susan Bensonic. I work for Noble Stride Capital. It's a transaction advisory firm with a key focus on SMEs within the sub-Saharan Africa. On relevance to what we're doing today, we do advisory and linking directly the buy side and the sell side. So I'll be sitting there as the buy side, as the investor, and I need you guys to convince me on your recommendation that you'll be making on NMB Bank. let it be supported by facts. And I'm very eager and curious to hear from all of you. Thank you.
Morning, everyone. My name is Ashley Quimburi. I work for KPMG in the Deals Advisory team. KPMG has 3 lines of services. We have audit, tax, and advisory. And our advisory team has transactions, infrastructure advisory, as well as IDAS. So we're looking to see what the team has in store for us. We want to hear your analyses and your valuations, and I'm excited.
Morning, everyone. My name is Ruth Njaga. So I work with Decarbonize Initiative. I work mainly in climate finance, so we mostly do investment research on companies that are geared towards sustainability. So my main interest is going to be looking at what people actually did that's geared toward ESG, and also, obviously, the financial bit.
Hi, everyone. Could I get a wave? Everyone's so tightened up. My name is Tiffany Mureithi. I work with Stanbic Bank in the risk department. I'm very excited to see you all here today. I think what I would say to you is it's already very bold of you to be here today. So you're already taking the right step for your future. So come ready, come prepared. You know, don't shake around. Just come, be bold with your presentation, and we'll be here to support you. Thank you.
Hello, everyone. My name is Fenwas Narakutundasak, and I'm originally from Madagascar. I'm just visiting Nairobi, and I'm currently based in Washington, D.C. as a consultant for an advisory firm. And I've been working for governments as an economist, economic advisor, and then as a researcher as well in think tanks, and also teaching at Georgetown University. All the best to each of you. I'll be looking into the economic side of the analysis.
Hello, good morning. Yeah, my name is Frederick Munyao. I come from a firm called Value Galactica. So we are a transaction advisory firm. We are both on the buy side and sell side. We do research, investment analysis, and we are also up to the post-investment support. So I'll be looking much into the buy side. Glad to have you on board. Congratulations for this step, and happy to hear from you and take on this.
Good morning, everyone. So, are you excited for the challenge? Okay, it's good to see you all. My name is Gideon B. I work from Raisin Capital. Raisin Capital is a transaction advisory firm. So we do all sides, from the buy side, sell side. For me, I would be interested to see from your financial analysis and valuation. All the best to everyone.
Good morning, team. My name is Maureen Kirubondisi. I work for Old Mutual Limited. Basically, the firm deals with investment banking, savings and insurance. All the best to the teams that are participating. I'm looking forward to what you have in store for us today.
Thank you so much. We can appreciate our judges as they take their seats. Thank you, thank you. One thing that you will note from each and every one of our judges is that they have actually celebrated you for being here. So you can be sure, even at the panels, they're not looking forward to see you fail, right? They're actually very optimistic in all that you'll be presenting. So be bold, as we said, don't be nervous. I know you've prepared this. It's an exciting topic, and it's an exciting thing that I know you all are ready for. So I hope we are all excited, are we? We are all ready. The judges are also ready. After this, we will all dispatch to the holding room, which is on my far right. But then remember, for the team leaders, please pass by the farthest end to confirm your slides that are ready and so on. That is much of what I have as far as introductory is concerned. As time will be, and we will if there be any changes in between the program, of course, we will keep you updated and we will keep you posted. So I would request all of us to just proceed to the far To my far right, there's the holding room through this door, but probably for our judges, you can just remain. So the exit is on my far right, which should be your left. Let's try to hurry up so that we can save on time. But then also for the team leaders, please pass by the extreme end.
Good morning, ladies and gentlemen. My name is Stacey Chepchirchir, and I'll be taking you through the executive summary. And I'm joined by Blair, Naomi, team leader Clarkson, and Ryan. So we issued a hold recommendation with a target price of 8,034 Tanzanian shillings, with the best case scenario being do not buy aggressively. So NMB is Tanzania's second largest bank with assets exceeding $4.7 billion, with generating profits of 749.8 billion Tanzanian shillings on a 16% year-on-year growth, contributing to nearly 30% of total sector profits. On shareholder value, NMB has maintained a return on equity of 22%, well above its cost of equity of 15.8%, proving that it's not just profitable, but it's also consistent with creating value for the shareholders. On digital leadership, NMB, with 96% of retail transactions being digital, with a customer base of 8.6 million, highlighting NMB Pesam, Shiko Faster, cutting loan turnaround to under 10 minutes. We proceed to the journey. NMB has transformed from being a microfinance institution in 1997 to being privatized in 2005 and to it being listed on the Dar es Salaam Stock Exchange in 2008. NMB's leadership is built on discipline, digital innovation, and sustained profitability, and NMB is setting the standard for banking excellence within the region and not just Tanzania. With that building information, I'd like to let Blair take you through the next bit.
Thank you, Stacey. Building directly on that foundation, I will now highlight NMB Bank's strategic position, industry relevance, and the business model. So at the industry level, Tanzania's banking sector holds around 71.9 trillion Tanzanian shillings in assets, yet penetration seems and remains relatively low. And this is a clear growth opportunity for NMB Bank. Its diversified business model underpins its resilience. The retail and SME banking opportunities provide low cost deposits, while the wholesale and corporate banking provide higher margin income. Yes, and lastly on that point is to highlight the dual banking for Islamic and commercial banking, which expands the market reach for NMB Bank. I will welcome Naomi to continue from there. Thank you.
Okay, thank you, Blair, for that. On mine, I'm going to present all the financial performance of the NMB. NMB financial performance is robust with approximately ROA of 3.5%, which indicates efficient asset use utilization. Next, they have return on equity of 22%, which indicates strong shareholders return and capital management. They have a cost to income ratio of 42%, which shows there is efficiency in their operation. They have their capital adequacy is comfortably above minimum. Next, they have their loan portfolio is well diversified into retail lending, SMEs, and corporate segments to Next, we go to the growth strategy of NMB Bank. The growth strategy is focuses on sustainability and scale. First, the focuses on expanding the digital banking and transaction, which improves which boosts efficiency and enhances market reach. Secondly, the SMEs and retail lending. The SMEs and retail lending are targeted to capture structural market. Next, we go to the threats that shapes the NMB bank. They have number one, that is the threat of entrance. New entrance is low due to high capital requirement. Next, there is the threat of the bargaining power of buyers, which is especially in the SMEs is medium due to under services. Next, there is the bargaining power of suppliers, which is relatively low due to high abundant deposit, which is about 48 trillion Tanzanian shilling. Next, we go to the competition is high. Let's go to the ESG factors. Number one, through the governance, through governance perspective, it is majorly owned by the Atramara, which regulates compliance and strong disclosure, which enables investors, which builds transparency and investors' confidence. Next, there is the socially, there is oh my God. Socially, there is extensive agency and digital banking through where it serves both the rural and urban population. Lastly, we go to the environmental, where there is they have a limited direct impact on the bank, though risk management practices they are applied only on the environmentally sensitive factors. I will welcome him on.
Investment summary. NMB is generating a substantial economic growth, economic value, with the average forecast of required rate of equity of 22%, and exceeding the cost of equity of 15.8%. On the investments sector, NMB is using different methodologies such as the Gordon growth model and the dividend growth model. This shows that the NMB is slightly undervalued with undervalued in the market with the current price of Tanzanian shillings 9,060 as at 9th January 2026. On the Tanzanian banking sector against the NMB. Between 2020 and 2021, it shows that the NMB is increasing its asset base as well as the interest rate base. But in 2023, it maintained and steadied. Again, this shows that NMB is performing good against its banking sector. NMB required rate of equity against cost of equity. This shows that NMB is slightly improving towards going upwards towards 2024, but it has not yet reached to the industry's required cost of equity of 29.3%, 29.4%. On the other side of the graph, it shows that NMB is performing well against among its banking sector. I will introduce Ryan to do the valuation part.
Okay, thank you. So I will be taking you through valuation and the thing.
The spreadsheet.
Sorry for the misinformation.
Spreadsheet.
Okay, there's a slight mistake, but I'll be taking you through valuation part. Let us start with DDM valuation assumptions. Yeah, risk-free rate. We did use a risk-free rate of 11%. Where did we get that from? The risk-free rate was gotten from risk-free rate was gotten from time is up. Thank you. We have risk-free rate and levered bet and country risk. All that is used to compute the cost of equity. Now let us get straight to dividend trajectory and payout ratio. This chart shows the let us get to loan and deposit ratio. Thank you.
Thank you for the presentation. So what happens to your recommendation if the cost of equity goes up by 1%? Will it still be a hold?
Yeah, it will still be a hold.
And the reason behind it?
The reason is the thing that we did use a 15% threshold, 15% threshold. And the figure that we had, it was negative 11. And that scenario was base case. So when we applied a best case scenario, the threshold changed from negative 11% to 4%, still showing that it hasn't surpassed our 15% threshold that we had placed before. That showing that it is still a hold.
Thank you for the presentation. So I have two questions. So one is, have you looked at the de-risking model of NMB, and what can you say about it? Maybe you can answer that first.
Pardon?
Have you looked at the de-risking model for NMB, and what can you say about it?
De-risking model?
De-risking, yeah.
No, we haven't used that.
Okay. The other one is, you have a risk of buy sentiment. So what is the most strategic growth opportunity that you see for NMB?
Strategic growth opportunity.
Okay, you've said the opportunity is a buy, but not an aggressive one.
We've said a hold, but don't buy aggressively.
Yes, so basically risk off. So what I'm asking is, what is the most strategic growth opportunity? Of course, not an aggressive opportunity, but a strategic opportunity that guarantees growth into the sentiment that you have.
Okay, we looked into the gross domestic product of Tanzania, which is highly growing. That's why we said that is going to directly affect the banks and the customers directly. Yes.
Yeah. Okay.
Thank you very much for the presentation. I really liked how you walked us through the history and then went into the details of our calculation. On the ESG part, you had the governance part. Do you know if the compensation of the management, because it's attached to the parent company, which is Atlas Mara, do you know if the management compensation is based on revenue or on revenue expansion or on share price?
On your question.
So the compensation of the management in the governance part, is the compensation tied to the revenue expansion and the EBITDA, or is it tied to the share price?
Normally, let's say share price, because the competition itself, it includes on the digital banking, and that's the competition mainly it's in the interest rate and the agency banking that have greatly increased, which tends to offer other financial services. So we base ourselves on the shares equity.
Mhm. So, okay, another question is, you recommend to hold
Yeah.
and not buy aggressively. So if the share price drops by 25%, you see the news today, what would you do then?
Now, when it drops by 25%, we will sell. As I said earlier, we did use a 15% threshold. When it drops negative 15, that means we will be jumping to a sell option. But when it is within the 15% threshold, plus or negative 15, we hold. Plus 15 threshold, we buy. That is why I said, don't buy aggressively.
So you buy when it goes up?
Yeah, when it reaches, it is when it goes past 15%, the threshold that we had placed earlier.
Mm-hmm. Okay. Okay, thank you.
You're welcome.
Good morning, ladies and gentlemen. Our analysis combines microeconomic insights, industry dynamics, and financial modeling that supports a clear investment recommendation buy with a target price of Tanzanian shillings 9,400, representing 15% upside. NMB Bank started in 1997. It is listed in Dar es Salaam Stock Exchange. It has extensive branch network, ATMs, agents, and digital platforms. It is the Tanzania's biggest commercial bank. It has segmented its market into retail, SME, corporate, digital banking, and agribusiness. Retail leads in terms of loans, deposits, and customer numbers. When we look at the industry overview, we realize that major commercial banks in Tanzania hold 88.6% of the total assets, and the two major commercial banks, that's CRDB and NAB, hold 47.5% of the market share. The sector profit grew in 2024 to 40%, and industry NPL ratio went to 3.2%, which shows an improvement in asset quality. In that context, we turned into the industry structure and why NAB Bank leads.
We conducted an analysis of the SWOT and found out that the NMB key strengths are strong market position, high operational efficiency with a cost-to-income ratio of about 40%, low NPLs, and a wide Wakala branch network. All these key strengths show that the bank has financial inclusion and SME growth. However, the weaknesses are reliance on the Tanzanian market and also the money mobile substitution. Following the SWOT analysis, the Tanzanian bank offers political stability, economic growth, a rapid digital adoption, and also a strong regulatory framework. Considering the Porter 5 forces, we see the industry rivalry and the threat of substitute is high due to mobile money substitution and fintech lending. The threat of new entrants is low due to strong regulatory requirements and high capital. The bargaining power of customers is moderate, where customers are able to switch from one platform to another at low cost. We move on to the competitive positioning, why NMB wins. NMB Bank is the second largest bank in Tanzania across the loans and deposits, and which shows that it has a strong market presence, extensive distribution network, and a strategic focus on the retail and SME lending, and also digital banking strength. All these show efficiency and profitability and resilience of the NMB Bank. We move on to the ESG.
Yes, NMB ESG isn't just a reporting requirement. It is key to national building resilience, and it is key to business resilience, and also NMB is a green finance pioneer, financing solar energy, sustainable agriculture, and reducing carbon footprint. NMB is inclusive as it provides digital banking, agency banking to all its customers. In terms of governance, NMB Bank has a strong board oversight headed by a female CEO, and this is shown by the 40% in the pie chart above. This This shows gender diversity in the NMB Bank. In terms of risk management, NMB Bank has maintained an NPL ratio of 2.9% and a diversified loan book which shows a buffer in terms of risk management. NMB is not only building a stronger bank, but also creating a more resilient Tanzania where everyone can be an investor. Let's move on to financial analysis.
Over the past 5 years, NMB has demonstrated resilient earning expansion driven by co-lending activities and diversified non-income interest. Most importantly, NMB has generated a return on equity of approximately 25% and a cost of equity of 19.5%, confirming that NMB generates value beyond the investor required return. So this performance is supported by improving operational efficiency. Our cost-to-income ratio sharpened to 38%, driven by a digital massive shift. Today, over 96% of all retail transactions happen outside of the branch. So by leveraging digital scale, NMB has decoupled revenue growth from operational efficiency. And our non-performing loan stands at a healthy 2.9%, creating what we call a downside protection, a buffer that keeps us profitable even when the broader macroeconomic environment gets tough. In 2024, NMB issued the Jamii Sustainability Bond on the London Stock Exchange, garnering over an oversubscription of over 284%, raising over 4 billion Tanzania shilling against the target price of 75 billion Tanzania shilling, proving that even international institutional investors see NMB as a safe, high-impact gateway into Africa's growth. Having gained that global capital, our visible earnings trajectory shows a clear path to our 1.3 trillion Tanzania shilling in the net profit by 2031. This forecast is built on two structural pillars: aggressive loan expansion into the high-yield SME and retail segment, creating a capital buffer. So we are not recommending a buy because NMB is a good bank. We are recommending it because the margin of safety is wide enough to protect investors from the macro volatility. We then, fundamentals alone do not justify an investment, valuation does. We applied a multimodal framework to determine the intrinsic value of NMB and also assess whether the current market price presents an attractive entry point for investors. So we then assign a 60% weight to the residual income as it directly captures value beyond investor required return. As NMB generates a return on equity of approximately 25% and a cost of equity of 19.5%, it produces a positive economic spread of about 5.5%, confirming that NMB generates a value beyond the investor required return. We then cross-checked our results by cross-checking with the dividend discount model and relative valuation multiples. When viewed through our valuation football field, it shows valuation convergence. The target price, the price of 8,150 Tanzania shilling sits towards the lower bound of our valuation range, and the target price of 9,400 Tanzania shilling indicates an immediate upside. So the difference between these two prices, indicates that the market is currently mispricing NMB's structural efficiency and digital scale. We then stress tested the bank under our bear case scenario, and by simulating high inflation and suppressed growth, when our sensitivity heat maps confirms this. So even if the cost of equity fluctuates or slows down, it still creates a buffer. Our digital first cost structure and the loan and performing loans of 2.9% create a protective buffer. So we then validated our results using the 10,000 Monte Carlo simulation, and found that 70% of outcomes exceed the current market price. So the math is clear. The upward probability fundamentally outweighs the downside risk. So putting this together, we arrived at the target price of Tanzania shilling 9,400, with representing an implied upside of 15%. So we therefore recommend a high conviction buy a high conviction buy, and we also recommend this stock for any type of investor, whether you want to invest in passive income through dividend growth or through long-term capital growth. NMB is the place for you to invest. Thank you.
Thank you for the presentation. Back to your net profit. In the projections, by what percent are you growing it every year? What assumption did you make in terms of the growth? There. Right. So, what percent growth are you assuming for the year, for the focus period?
We are using the 6.0% growth.
Is that historical? Why that? Why 6.0?
Because it shows that it provides a margin for us to create value beyond investor required returns. Okay. And it shows that the margin of safety is wide enough for investors to be protected from the macro volatility.
Thank you for the great presentation. I really liked how you walked us through the company, but also the ESG. You went into details and then the financial analysis. I want to ask, so the recommendation that you did is based on investment really or trading?
It is based on investment and also trading.
This recommendation that you are doing? Okay.
Yeah, it is a buy on recommendation for investors to invest in the NMB Bank.
Uh-huh. Yeah, and you are firm on your recommendation on both for trading.
Pardon?
You are firm on your recommendation for both trading and for investment.
Investment.
Okay. So I saw you use different assumptions and different valuation methodologies, and then I think you had a test as well on the different scenarios. Which one do you think really supported your decision, your recommendation?
The residual income model supported our decision because it directly captures value beyond investor required returns, and it also produces a 5% economic spread that protects us from the macro volatility of the macro environment that we are in.
Can you explain a little bit on that economic spread?
The 5% economic spread. So the 5% economic spread, it's a margin. It's a margin of safety, and it shows that NMB is creating value beyond the investor required return, and so investors should be sure that they are going to create value. Their investment are going to create value through dividends, and they're also going to get value through the capital growth, long-term capital growth. So they should be sure that they're going to get value from their investment.
There is growth and there is value.
Pardon?
There are both growth and value.
Yes,
growth
yes, yes.
Okay, thank you.
Thank you for the good presentation. So I have two questions. So the first one is, you've given a buy sentiment, especially for the investment horizon, or rather for the investor sentiment. What is the horizon that you would tentatively have for it, and what would make you change that, in quote, bias? What is the investment horizon tentatively for your buy sentiment, and what would give maybe you to change that bias?
We have used a 12-month to 24-month horizon, and what will make us change our buy recommendation? I don't think anything will make us change that, unless the risk in Tanzania, but right now we highly recommend a buy recommendation. Yes.
Okay, great. And on the portfolio quality, what would you say in terms of its concentration? Concentration.
Pardon? The whole question?
On the portfolio, portfolio concentration of the bank, what would you say about it?
I would say that the portfolio is great so far. Like it offers a diversified portfolio for every type of investor. So the portfolio is great so far.
Maybe if I can also add something. Okay. You saw the retail segment, much of the portfolio is aligned to the retail, and the retail was leading with about 56%. Yeah.
Okay, thank you. Yeah, I think that's it. Thank you. You can have a clap for them.
Team G.
G.
Good morning. My name is Ryan Mutahi, Amanda Masi, Matthew Moko, and Karanja Rohio. This is Team J. So this first slide paints a pretty picture of NMB Bank, but none of that would make any sense or matter without context. So allow me to lay out the context for you now. So, the banking sector in Tanzania is a duopoly, with NMB and CRDB controlling 48% of the market. This leads to market dominance, which gives them pricing power and deposit stability, which smaller peers cannot compete with or replicate. Secondly, macroeconomic tailwinds in Tanzania point to 6% GDP growth in 2025, and this shows up practically in increased credit demand, for example, in the agriculture sector. Finally, on the industry overview is the sector of the non-performing loans sector, sorry. They have 4.4% industry-wide non-performing loans, whereas NMB's is 2.9%. So what does that say? That they're growing safer relative to their competition. Now let's go and zoom in on the business overview. The question is, how do they translate market dominance into shareholder value? They do this by three things. Quality revenues, 38% is non-interest income of their revenues, that is. They are the second highest holder of assets, whereas they are the first in profitability. So, the big picture and the context of our valuation is that it's a duopolistic structure within a growing economy where NMB is the most efficient operator. Now let's dive into our valuation.
So we have a buy recommendation for this company due to its large structural holdings and also its compounding abilities. And when we look at our three compounding factors that are of our buy segmentation is our structural margin advantage, our digital-led operating leverage, and resilient balance sheet. So we have a target of 11,155 from a buying price of 87.90, which is a 26.9% upside. So when we look at the net interest margin, what happens now is that it's not only supported by temporary market conditions, but it's supported by a very strong balance sheet. The main factors which are going to sponsor this is going to be the funding structure, an 85% CASA base, which means that there's going to be a lower price mismatching. Then we also have asset structure, which is a granular and short-term loan duration, meaning that now the funds are able to be distributed on a wider basis and at a smaller rate, meaning that there's less risk associated to the deposits and the loans out. So now there's also liquidity discipline, meaning that now the excess liquidity is able to be outpassed, and also it remains structurally sound. When you look at the digital dominance provides a permanent efficiency moat, meaning that now there's also going to be a digital migration to the online spaces where it's going to reduce overheads in terms of management fees and costs, whereas now there's going to be an increase in transaction volumes. Then now thirdly, we're going to see a decrease in the CIR ratio, meaning that the cost is going to be decreasing while income is increasing. Then now we can see that revenues are going to outscale the costs. Then now when we look at the aspect of now the valuation, we see that within the asset quality, this is the main competitive advantage within the asset quality. So now we see the credit structural moat, whereas the 50% structural basing within the deposits to the loan out of the customers, we see that there's going to be a 50% salary backed, meaning that the customers are more secure and there's less risk associated to this. So now when we look at the concept of this a shorter NLP, whereas now it's at 2.9% where the industry average is at 5%.
ESG is no longer about ethics, it's about strategy. Sustainability is now a financial decision. National Microfinance Bank has been a market leader in terms of its ESG initiatives. Under the Euromoney, it was given an award being the best sustainable bank in Tanzania, as well as the best sustainable bank in ESG in 2025, 2024. Additionally, it has what is called the JAMI sustainability bond, under which $73 million has been raised, collectively leading to 400 billion Tanzanian shillings that has been raised to date for the Jamii bond. The Jamii bond is also listed in the Dar es Salaam, Luxembourg, and London stock exchanges to date. And this happened in the year 2024, but for the Dar es Salaam listing, it happened in 2023. Additionally, we also have the Jasiri social bond, which is for women-led initiatives for the micro enterprises as well as small and medium enterprises. We also have the corporate social initiative, under which 1% of the profits annually is donated to community initiatives. And generally, NMB Bank funds green financing projects as well as blue projects, which include wastewater management as well as prevention of pollution and funding of green buildings. So we move on to the valuation segment. Under our valuation, we recommend a target price of 11,153 Tanzanian shillings, which is a 26.9% upside from 8,790 Tanzanian shillings, which was on 6th January 2026. So under our valuation, we used 4 main methods, which included the residual income model, the dividend discount model, the price to earnings, and the price to books, each given a weighting of 25%. The residual income model had about 16,195 Tanzanian shillings, followed by the dividend discount model, about 12,409 Tanzanian shillings, and the price to earnings and the price to books, which had 7,992 Tanzanian shillings, as well as 7,656 Tanzanian shillings, ultimately summing up to 11,153.33 if you give them each a 25% weighting.
So looking at the investment risks, there are several risks that are associated with capital allocation to NMB Bank, but the 2 key risks here, focusing on the basis of significance of risk and probability of the risk, are currency volatility and competition from fintechs. So looking at the currency volatility, the Tanzanian shilling has experienced great volatility against the US dollar in recent years. This is more or less caused by significant macroeconomic headwinds, which in this case are political instability and forex reserve shortages. So what this has done is actually drive down the price or give a negative pressure to the Tanzanian shilling against the US dollar. And this has caused foreign exchange risk and discouraged foreign investors from investing in Tanzania because they feel that there is a high risk associated with putting their money in that economy. So looking at competition from fintechs, Tanzania's financial ecosystem is rapidly moving towards digital solution, posing a competitive threat to traditional banks like NMB. So what has happened is that fintechs are actually able to onboard previously unbanked individuals, put them in the ecosystem and give them financial services which they did not have access to previously. But NMB has not taken this lightly and have actually invested heavily in digital solutions, pioneering in mobile banking such as the bank app called NMB Mkononi, which gives the far-flung Tanzanian citizens access to financial services from the top of the hand on the phone. Now for the portfolio, it is highly volatile and sensitive to 3 specific things. 1 is GDP growth, 2, interest rate changes, and 3 is the NIM and loan growth assumptions. Now for the GDP growth, a growth in GDP will actually lead to an increment in the demand for debt services in the country, which will go hand in hand with the interest rate earnings for the bank and actually improve the balance sheet. Now for interest rate changes, an increment in interest rates will lead to an increment in the interest earnings, but a decrease will lead to a drop because they are positively correlated. And now for the NIM and loan growth assumptions, for the net interest margin, as he mentioned, an increase in the NIM will lead to a growth in the net income. And for the loan growth assumptions, since the main asset for the bank is loans, they have the most significant result on the balance sheet. Yes.
Therefore, they are an underpriced market leader with a strong digital franchise and a fortress of a balance sheet. So, to the investor, we are convicted to recommend a buy. They will get an upside of 26.9% at a target price of 11,153 Tanzanian shillings. Thank you.
Thank you for the good presentation. So my first question is, I've seen it's a buy. I would want you to share more detail and insight on the perceived value and the intrinsic value. How did you arrive at it?
So I'll start on that question. Thank you for your question. So as you've heard, we took 4 valuation methods to achieve a blended valuation, and that's a residual income method, dividend discount model, the PE, and the PB. So through that blended valuation, we came to an intrinsic value that was undervalued compared to what NMB is actually, worth. So yes, that's the methods that we used.
Okay.
Additionally, our recommendation guide was that if the increase or percentage is greater than 5%, we recommend a buy. And if it's between 0 and 5, we recommend a hold. And if it's less than 0, then after that, we recommend a sell. Also, under the dividend discount model, we used a terminal growth rate of 14.02%, a cost of equity of 17.6%, and then we discounted the values of the dividends after forecasting them. And then after this, we summed the PVs and then came up with the value, and we divided it by the number of shares that was issued to come up with 12,409. And the other methods follow a similar structure, but the PE and the PB are relatively simpler. Yes.
Okay, that's articulate. Thank you. And the other one is, have you looked at the potential monetary and fiscal risks for NMB, especially that it's operating in a duopoly that will guarantee its dominance in long term, in the medium term as well?
So when we looked at these factors, we considered them all. Because now when you had, to pardon on your question, you had mentioned now because we looked at it from an introspective view, where we didn't only look at it from the financial aspect, we also considered other factors. Where we took in factors like the digital dominance, because the digital dominance is one of the key driving factors that allow this price to occur. And because now we also see the potential value of the company, because you're finding that actually 85% of customers are going to use the digital aspect, and it's also growing because also of digital reach. So this digital reach actually plays a very big basis on our valuation, meaning that it's underseen value.
So just to add on to that, it's also important that we note the duopoly, so the combination between NMB Bank and CRDB is 41.7% of the entire Tanzanian market. But the fact is that NMB has 31.8% of its ownership from the government of Tanzania. So ideally, even if there were some regulatory risks that would come in due to the duopoly situation, the fact that there's a lot of government ownership and also onboarding of very many civil servants into the company as actual members of the bank, it more or less reduces the possibility of that risk. Yeah.
Lastly, in terms of the monetary supply, so we have monetary policy under which you either increase or decrease the money supply or increase or decrease the interest rates. So in the case where some of these factors may change, it will have a big impact on the valuation. So if the interest rates are higher and if the money supply is higher, for example, and inflation goes high, then that will negatively impact the valuation in the sense that it's going to change. And then if it's also fiscal policy, which involves manipulating the tax rates, either increasing or decreasing by the central bank, as well as increasing or decreasing government spending, then these also have either a contractionary or expansionary impact on the economy. And as such, this can also affect the valuation, either negatively or positively, whichever way you view it. Thank you.
Good. Thank you.
Thank you very much for a great presentation. I loved how you analyzed it. I have a few questions. Number one, on the recommendation. The recommendation is for trading or for investment? And if the price, the price share drops to 25%, do you recommend buying in terms of investment or and in terms of trading?
Ideally, when you look at the two aspects, now it comes into trading and also the investment aspect. Investment aspects are always long-term because we talked about the key factors that are going to allow the expansionary growth of the company, where I highly keep on maintaining the fact that it's digital dominance because we're seeing untapped talent in the company. So when we look at these aspects, is that regardless of a small price dip, what happens now with also the huge CASA base of 85%, where you're having smaller individuals, as we said, the social workers and small deposits, which is granular, depositing into the company. In the long term, it's always serving the population base and will always retain a high value, and also in the long term will have a very good buy projection. So all the fundamentals and the intrinsic factors will always align to the projection of 26.9%.
Then also just to briefly add on to that, the bank is currently trading at a price to earnings ratio of 6 times. So it's quite discounted, and for a long-term investor, there's a lot of potential for that. So it's a recommended buy side for long-term. Yes.
Then also as well, we can now dive into the factors that will make it go lower, but we could also still recommend a buy, because you're going to look at things like the previous judge asked about now, the inflation standard within the country. Inflation can either play a good or bad role within the company, but in our case, it's both good roles, because an increase in inflation, ideally what happens, it makes it more expensive for the customer to borrow. But ideally, they will readjust their rates in terms of price matching to be able to keep up with those rates and also keep up with the profitability. When there's a decrease in inflation and a customer would want to borrow more to fit their needs, and same thing with an increase in inflation to meet their daily demands. So there'll always be need for this basis, and also the target audience is what matters, because when you look at the banking audience that we targeted, they'll always have a need for that banking need.
Just to add on what my teammates have so excellently said, we are recommending this to an investor. This buy recommendation is to an investor, and basically we're buying the earning power, the earning potential, and the earning power. We're not necessarily buying the price. So yeah, thank you for your question.
Okay.
Could you, how exposed is the loan book to climate-related risks? And the second question would be, could you just run me through how you came about? Did you say your cost of equity is 17%? How did you arrive at that?
So I think I can start with the loan book. So majority of the loan book, let me say just under half of it is what I can call salary deductible. And most of those are civil servants. So that comes straight from the payroll, and that can basically subsidize the risk in the corporate side of their lending. So because so much of their loan book is salary deductible, it's like a sovereign shield, if you can call it that. So I think that mitigates the risk to answer your question. And now my teammates will take your second part of your question.
Kindly let me his part before we jump onto the second part. So when he talked about 50% of the clients are going to be salary-based backed, we also now looked at the other aspect of it, it's granular, meaning that the loans that are given out are not like in huge pot chunks to, let's say, very few individuals. They spread out the risk over many people, distributing it over little amounts. So the risk of default is also lower. And now when you combine the two, when you look at the aspect that there must be a salary, not must, but most of the time there's a salary based on it, and also the smaller amounts, you always find there's a lower rate of default.
So for the cost of equity, we looked at the risk-free rate, which is about 3.57%, which was based on the long-term bond price. And then we also looked at the beta value, and we multiplied the beta by the market risk premium, which was 10%. So 1 times the 10%, and then we added the 3.7%, and then we came up with, we also had another additional value of 3.5%, and then it added up to 17.06 as the cost of equity.
Thank you for your questions.
Good morning, everyone. So we'll be taking you through NMB Bank's equity analysis. My name is Doreen Metili.
My name is Talisa Nasike.
My name is Elsie Mushiri.
Carlton Mwangi.
Vandas Munana.
I'll be taking you through a brief overview of our presentation. So we have the business description, the financial analysis, the valuation, the industry overview, and the competitive analysis. So I'll be taking you through the business overview. So for NMB Bank, it's the second most profitable bank in Tanzania with a net profit of 647 billion Tanzanian shillings, and it also has the largest digital presence, and it was founded in 1997 after restructuring of the National Bank of Commerce. So I'll be talking about the core segments in the business model. There is the retail banking, which is the largest, which has the current savings accounts and the agricultural financing, and then the wholesale and corporate banking, which has the corporate loans, cash management, and then the treasury investments, which has the foreign exchange and the money and capital markets. And then through the revenue and cost structure, there is interest income from loans and advances, there's income from government securities and investments, and then fee-based income. Then for cost structure, it is primarily driven by the core segments highlighted in the business model. Yes.
I'm taking you through the industry overview. The following data shows the following. First of all, that the growth of the assets is attributed due to the fact that banks have been aggressively pumping capital into the banking sector. That the banks, the sector has nearly double the required minimum legal amount, which is attributed due to the fact that they are investing into the sector. That through the issuing of the bonds in a global exchange, NMB has shown that they're able to attract foreign investors. For the competitive positioning, the market reach has resulted into increased profits, which are used to pay back the dividends to the investors and to invest into technological advancements. And the digital banking part of NMB has resulted into increased efficiency and has allowed the users of the apps to be able to access funds for day-to-day operations. And for Porter's 5 forces, as you can see, the force 1 and force 3 are high, force 4 and 5 are moderate, and force 2 are low.
So NMB Bank has delivered strong operating and financial performance, which is driven by 3 main things, being balance sheet growth, efficiency, and effective risk management. The assets and customer deposits continue to grow at double-digit rates, which reflect strong customer acquisition and transactional businesses. Profitability is at record high, and the bank maintains excellent asset quality. With this, they also have one of the lowest NPL ratios in the industry and a capital adequacy ratio above regulatory requirements. In terms of their outlooks, earnings are expected to grow at low to mid-teen CAGR, which will be driven by loan portfolio expansion, improved risk-adjusted returns, etc. And also the ROE is expected to remain above 20%, which reflects strong capital efficiency.
Although the stock trades at a premium price to book value, this is justified by strong profitability, a solid financial position, and consistent dividends together with market leadership. In comparison to their peers with similar profits, the stock appears to be fairly valued and moderately undervalued. Our team's investment recommendation is based on the strong fundamentals, low credit risk, high dividends, and the ability to maintain double-digit profit growth. The potential risks include macroeconomic slowdown, regulatory changes, and increased competition. However, NMB's scale, balance sheet strength, and management provide strong downside protection.
So I'll be taking you through the valuation analysis. So we use DDM, discount model, with a peer cross-check and including the sensitivity tables. So our target price was 73.60 Tanzanian shillings with an upside potential of 14.8%. And then the key drivers, the ROE was 25% and the 18% profit growth as at 2024. And then for the expected total return, we got as 19.8%. And the beta calculations, we used 0.1, which falls within 0.8 to 1.2 bank range. Conservative versus volatile frontier markets. And then for the CAPM formula, we got 11.7. But however, we adjusted it upward to 13.2%, adding a small premium for liquidity. For DDM model, we got our total intrinsic value per share as 8,414 and our implied market capitalization as 4.21 trillion. And for the sensitivity tables, we included sensitivity analysis because intrinsic valuation models are highly assumption as sensitive, particularly to cost of equity and growth inputs.
For the financial analysis, NMB Bank PLC has shown exceptional growth with a CAGR of 52% over the last 5 years. They have also shown, the financial highlights also include a robust year-on-year operational efficiency and reduced costs, leading to a total income increase of 11%, net interest income by 13%, non-interest income by 7%, and net profit after tax soaring to 541 billion Tanzanian shillings, which is equivalent to 14% YOY. As for the balance sheet strength, the loan and deposit growth fueled by high demand across diverse banking sectors and strong customer confidence has led to a loan growth of 14% YOY. High credit demand in wholesale, personal banking, and table finance was lead on this. Our CASA comprises of 85% of deposits, showing strong liquidity and deep customer trust. As for the quality and risk, asset quality and risk management, NMB demonstrates sophisticated risk management, improved asset quality, while aggressively expanding loan book, example being the NLP reduction occurred even while doubling the size of their loan book. When at 2020 there were the 5% cap, and they were able to bring that down to 2.8%. This indicates strong leadership and the institutionalization of robust risk management. As a cost-to-income ratio is also the best in that class at 38%.
Due to time, I'll quickly be taking you through the investment risks. So the gains we know that have placed the bank as financially sound. However, its future investment risks have increasingly been driven by 4 main things: macroeconomic exposure, structural shifts in the monetary policy, climate vulnerability, and digital disruptions. As we can see, when we start off with macroeconomic risks, the Tanzanian economy has continued to show resilient growth, with their real GDP being at 5.1% in 2023 to 2024, and it was expected to go up to 6%. Inflation has also remained within BOT's target, which limits pressure for sudden monetary tightening. We then move on to monetary policy shift, in other words, the interest rate risk. BOT wants to move towards adopting an interest rate-based monetary policy framework with a central bank rate set at 6%, which improves policy credibility, but rate transmission is uncertain, creating a net interest margin volatility. We then look at credit risk, which, yes, has improved, but it's still quite a core risk. Industry non-performing loans went down to 3.2% in 2024, well within the required threshold. And lastly, I'll be taking you through the climate and digital risks, which are more structural and long-term risks for NMB Bank. And this is because more than half of the bank's credit exposure is tied to climate-sensitive industries like agriculture and trade. And yes, NMB does factor in climate risks within their framework. However, it's more qualitative than quantitative. Therefore, they could be underestimating certain factors. And due to that, we have come up with 4 actionable risk mitigation recommendations. 1 being quantitative climate risk modeling, 2nd being strategic digital defense of the funding base, enhanced risk transfer and funding diversification, and operational focus on loss given default.
So NMB Bank has continuously strengthened its ESG initiatives by focusing on financial inclusion, climate responsibility, and governance transparency. Between 2019 and 2020, ESG reporting was mainly CSR focused, focusing on community support, digital banking, especially during the COVID-19 era. In 2021, sustainability became a formal strategic pillar, introducing ESG performance indicators in alignment with global standards. By 2022, NMB pioneered a gender-linked financing through the Jasiri Bond, which supports women-led enterprises. In 2023, the bank expanded sustainability financing through the Jamii Bond and introduced sustainable financing frameworks with external verification. By 2024, NMB shifted towards measurable ESG performance, establishing emission baselines, reducing resource use, and improving gender representation. So, in conclusion, our recommendation is to buy stock within NMB Bank PLC, and thank you for listening.
Thank you for the presentation. Just how many valuation mod? You said you only used one method, which was DDM. Why just one method? Why not? What made you decide not to at least use 2 or 3, then weight them?
Okay. Thank you for your question. At the moment, we agreed that we use the DDM. Yes. I'm not sure.
Okay.
I have a question on this risk mitigation recommendations. I'm glad it's put up there. Thank you very much for the presentation, first of all, and great job. Who are you recommending it to? Is it to the bank or to the investor? And for the and which of the risks that you listed cannot be hedged?
Okay, thank you for your question. So these risks, the mitigation recommendations are more towards the bank and the investors, because we just believe that if the bank is able to mitigate them and control them, then it's easier on the investor side, because some of these risks are not, they cannot be controlled by individual investors, especially when it comes to things like climate risks, when it comes to cybersecurity, mobile network operators, things of that. We think it's best that the bank is to try and mitigate the risks. So the recommendations are towards the bank and not the investors. And in terms of which of the recommendations cannot be hedged, right?
Which of the risks?
Which of the risks cannot be hedged? I would think, I would say it's probably with monetary policy shifts, and that is because it's much harder to mitigate that particular risk, especially because, first of all, we did our presentation based off 2020 to 2024. There's certain monetary shift that we did not expect Tanzania to go through as an economy. And then obviously in 2025.
Can you explain the shift from what to what? To the 6% interest based to what? What was it before?
2023 to 2024, it was at 5.1 second. It was at 5.1%, and they expected it to go to a rate of 6% with the Sorry, that was the GDP. The central bank's rate is at 6%, and I think they were still within the threshold towards, even when there was an economic shift in NMB. Yeah.
Thank you for the good presentation. So I have 2 questions. So the first one is, you've mentioned there have been investors for NMB. Do you have numbers to this, and what kind of or type of investors are they? And then the other one is, could you talk to the securitization of the loan book and how it is related to how their NPL looks?
Thank you for your question. As for the investors, as you all know, their shareholding comprises of the majority shareholder being RI's BV at 34.2%. This is obviously an international firm, so it shows interest from international investors into the bank and brings about international banking standards as well. And the second investors would be the government of Tanzania, being the second majority shareholder at 31.8%, and brings about stability and security. And lastly was the retail investors, which holds 33%, showing high free float on DSE. And on your question for securitization of the loan book,
relating to the NPL. Well, the fact that they're able to reduce the NPL ratio from 5% to 2.8% shows they have a strong focus on making sure the bad debts don't come to like negatively affect them. The question was the securitization. Could you repeat your question, please?
Oh, okay. Yeah, my question was, could you talk to the securitization of the loan book and how it relates to how the NPL currently looks?
The liquidity ratio was dropped from 38% in 2020.
Okay, maybe I could explain a little bit more. The securitization, I mean, what they've put in place, the actual things they've put in place to secure those loans. Is it land? Is it their pay slips? How have you, or rather what have you found out in detail? Talks to the securitization and how it makes the NPL look like.
I think the majority of the secured most of the loans due to the fact they have a high CASA. So
It's okay, fair enough. Okay, that's it for me. Thank you for the good presentation.
You didn't talk about the FX risk. Is that part of the risk that you're looking, or you put it under the umbrella of the macroeconomic risk? And number two, do you know if international investors can take their money out easily, and would that present another liquidity risk for the investors, a risk premium?
Okay. In terms of the FX risk, we didn't include it in our presentation, but it was in our written up document because of, so we just put it now into macroeconomic and the macroeconomic exposure because we couldn't have been able to go into detail about it. Yes. Repeat your second question.
And international investors, when they invest in, can they take the money out easily of Tanzania?
From what I believe and think, I think yes, they can. And even though right now NMB Bank is only quote unquote bigger in Tanzania, I think right now they're extending their borders, so now opening more doors to international investors. So I think also they will also choose to adopt other payment methods, because example with the whole Ukraine-China changing their system, I think NMB plans to adopt that system, so I would think to make even international investors be able to acquire and move their money easier. Yes.
Yeah, okay, thank you. You had not told us its team? You had
M.
M. Oh, okay, thank you. That's it from us.
Thank you.
does HR deal with deal? Like hiring, onboarding, managing insights, and more. All
today is broken. Every day, people juggle so many different tools just to get work
I
done.
was then. I forgot real estate. But we need to see number 6.
Check 1 2. Sound check 1 2. Sound check. Sound check. Sound check. Sound check.
ladies and gentlemen, just a quick of your attention. Those who are out there, please pace up to start in the next 5 minutes. So let us pace up a little bit. Ladies and gentlemen, if you can hear me, please begin making your way in. We want to begin the next session. So if you're out here and you can hear my voice, just pass it through to your neighbor. Let's begin marching inside. Those who are yet to get in, please let us hurry up. We want to save and conserve on time. If you're still out there, please kindly march in. Okay, good. Let us settle down now. Let us settle down. And welcome to our session 2. I don't know who is on this side. If you can minimize the... Maybe our sound team, if you can... But in the meantime, if there's anyone else who is still left out there, kindly get in so that we can start together. Excellent, thank you. How are you all? So welcome to our session 2. Session 1 was fantastic, and I hope I know you have enjoyed. Please tap your neighbor and tell them congratulations. Good job. Excellent. I want to give us just some 3 minutes. Much as you have been interviewed, you have also been an audience at one point, and I just want to do a quick peer review because you have been an audience, maybe except the last group. Everyone else has been an audience for a particular group. So I want just as a representative from room 1, room 2, and room 3, just one person in random, and a volunteer for that matter. Just tell us the experience and which group do you think did a good presentation and why. Disclaimer, this is independent of what the judges will say, right? I think that disclaimer is important. So can I get a volunteer at room 1? Thank you. So which group and why?
Which group I think did the best?
Yep.
I'll choose 2.
No, just choose one. And to avoid biasness, not yours. Not where you belong.
Okay, then I have 1.
Thank you.
Where are they? Those guys are there.
Okay.
Yeah.
Why? So why them? Team what? That's the
I
team.
can't recall their team.
Team J. Okay. Why?
I just love their presentation and how they had a good flow. Yeah, and also how they answered their questions.
Excellent.
Yes.
Let's give a round of applause to both him and the team. Room 2. Room 2 is just the next. You're in room 2, right? So which group and why?
Good morning, everyone, or it's good afternoon, I think. Good afternoon, everyone. So, I want to start by sometimes you think you're a champion until you meet the real champions. So, I think the group which did best in our room was, in my perception, without any bias, I give it to, let me see. Why am I looking aside and they're at the same table with us? Yeah. They did well. And
hope that was
the
not
reason
your
why I think they did well because they kept answering the questions confidently, and they had good teamwork. Yeah, thank you.
Was that your team?
No.
Okay, thank you.
team.
So let's give this group what? N. Group N. So let's give a round of applause to Group N and the gentlemen. Those who are on the far right, I want a volunteer from there and just tell us which group and why. Just a volunteer. Anyone who was from room 3? Anyone? Sorry, you're there? Okay, cool. Oh, this is a judge. No, not a judge. I'm saying any of the audience who was in room 3. Ah. Okay, room 3, no one was there. Certainly there was some people. Then I'll just pick. Okay, fine. If you're in room 3, just by a show of hand, I'll just pick one at random. Room 3, room 3. Okay, cool. So I need a lady. Actually, for gender parity, I need a lady. Thank you. So which group and why?
Okay, my answer would be a bit biased because I was the second last team, and unfortunately, I'd say our group. So yeah, so my answer is a bit biased.
Yeah, yours could be biased. Anyway, anyone in group in room 3 that want to who must be a lady for gender balance? Room 3. Let us celebrate room 3. Maybe everyone there was did a good job. So the reason why we've done that just Pia is so that besides your presentation, there is always a cross-pollination of thoughts, and we can always learn from each other. So that is why it's necessary. So whatever you've picked from whichever group did best, including your own group, those are learning lessons, both in public speaking or speaking in front of people, making presentation, etc., etc. In your career, you will encounter those those scenarios pretty often. The next thing, approach yourself one more time. Thank you. The next step, I want to hand over to the judges. We had judges in each of the 3 rooms. So I want the judges to give us some groups that are proceeding for the next session of presentations. So I think per group we will have a representative, a judge. If your group is mentioned to proceed, please you will step to the hosting room. It is on my far left, and then we will guide you from there as the presentation starts. So could I start with room 1? The judge representing room 1 to just give us the 2 groups proceeding. Okay, just a minute. Just a minute. Maybe group 3 seems you've been given a little bit more time to if you have a a group that you felt that did a good job. Any volunteer last one more time? Group 3, represent your members. You see, group 1 and 2 has done a good job, right? Anyone from group 3? Okay, excellent. How was the first session then? A general feedback. How was the first session? Did you enjoy it? Oh, any reaction? Thumbs up. If you enjoyed, thumbs down. If you did, neutral. Very few thumbs up though. At least no thumbs down, right? So you enjoyed the session, right? And you also enjoyed the engagement with the judges. Well, we finalize a few things that we are just so that we can just take off. just as we've done peer review, also the judges, you know, they were the audience to every one of you. So again, per room, we also want to hear from the judges. Who did they pick as their best presenter, and why? So maybe also for the judges in the, you know, the individual rooms, room 1, 2, 3. I also want to hear from the judges. Out of the many teams that you judged or you listened to, which were your, your best presenters and why? So again, so this time around I start with room 3. Room 3 coming forward. So room 3, who are your best presenters and why? Yeah, for sure.
Hi, everyone. So I may not recall the names, but the gentleman with specs. You could just stand, please. And I hope everyone is here. Could the second group that presented for us, please, where are you? All right, the lady with the striped dress. Sorry, what's your name? Julian. What's your name, please? Mary. Oh, so for us, I think also the other judges can comment on why we think that you are the best presenters. I think for him, every question I twisted and moved around, he was able to answer. And even where he may have answered something that may have not been 100% true, he still backed it with a lot of confidence, and he had knowledge of the concepts deeper than what was just on the slides. Then for her, I think that was the only group, so kudos to you, that started with a nice question to us. So that was really good. You were also really confident, and you didn't shy away from any of the questions, even the ones outside of what you were presenting. Yeah, those are my comments.
So a lot of applause again to the judges. And oh, you have a comment? Yeah. Okay, cool. The judge want to make a comment as well. Proceed.
So hi everyone. So if I can also add, this was a very tough decision. Everyone else really did well. All of you are very confident and very calm. You also answered our questions very well. You also did a very good technical analysis. You knew your stuff. Let me just say that.
Just tap the back of your neighbor and tell them you did a good job. Excellent. So we're good with group 1? Excellent. So let's go to group 3. So we did 3, so now 2. Judges from group 2. So please give us your highlights.
Hello everyone. I'm Susan again. I was in room 2 as a judge. I got to choose 2 best presenters among the teams that presented. As well, it was a very tough decision. Everybody was composed, calm, and you really articulated your presentations well. But I had one lady called Wanjiku from team K. Maybe she can stand. Yeah, it was a joint decision or choice by the 3 of us. So you really did well. You are confident enough. Sometimes what matters is your confidence and how you articulate your presentation, and also ability to just give facts and back up whatever you are presenting. So she was able to do that, and that is really commendable. The other was from Team E. Was it Team E? His name is Mohammed. Actually, from that team, there were 4 members in the team. They all did a very good job. So it was really tough for us to choose Mohammed, and also to be fair enough to at least to choose a gent. The lady, you also did a good job. The lady in black, I don't know your name. So basically, you just need to show confidence and be able to articulate your presentation and give your facts. And also, we would also judge by the connection between the facts you are giving in relation to the questions we are asking. Is it really something that is realistic, not just the answer? So that was well done, and well done to all the teams that presented in room 2. Yeah, good job.
Excellent. Any highlights from the rest of the judges, or that's all? Okay, cool. So let's go to room 1. Room 1 were here. So let's hear what were the highlights and the takeouts from the judges.
Good afternoon, everyone. Once again, my name is Miriam. So we decided to pick one female and one male. So for the best presenter male, he's at the back in a pink shirt. Please stand up. And for the female, she's right here. Please stand up. So what influenced our choices is both of them were very confident. They answered all the questions we asked them, and not just what we asked, but they answered even more than what we asked. Yeah.
Wow, that's great. It means the teams you were really prepared for the presentations. Maybe we can hear actually from one of the gentlemen among us, the judges. I think we've heard from the ladies. Let's hear from our gentlemen.
Okay. Hi, guys. Yeah, that was a really good presentation. So we were in room 1. For us, I think we found that you had the facts and you really were syncing them with the marketplace, which is quite a strength. Then there was a balance of qualitative and quantitative, which was another strength. Overall, we found you were all prepared. And for the top 2 presenters, we felt that you had articulation, industry knowledge, and confidence that really made us choose you. Thank you.
Wow, let's appreciate our judges. Maybe you have something to add? Certainly.
So for me, I was in room 2. So basically, the team were very competitive. For me, what we like mostly was more of how you can articulate. Can you corroborate your facts with what you're presenting? And at the end of the day, it's more of just the confidence. So well done.
Thank you. I think I personally interacted with all rooms, and I appreciate you all. As an actuarial profession, I liked the way you guys were too much versed in the knowledge of the industry, the valuation models, the nitty-gritties of the risk aspects, and so on and so forth. I like the measurement criteria that all of you used. I mean, that was just phenomenal. So one more time, just tap the back of your neighbor. And maybe now this time, tell him or her what you learned from whoever that you listened to, just for 1 or 2 minutes. What did you learn? Or is there anything you learned? Actually, I think that should be the first thing. Is there anything you learned? So that we can be a little bit more discreet. I see some people who are not conversing. Actually, judges seems they learned a lot. So if I notice you're not speaking to your neighbor, I'm likely to ask you to say what you learned to all of us. Yeah, I'm liking the engagements. This is fantastic. So who learned something? Who learned something? By a show of hands, who learned something? Okay, who did not learn something? By a show of hands. I think that's a better question. So who learned something? Wait a minute. So that mathematics then is not adding up. So who did not learn? No one. And who learned also no one? How does that make out? Sorry? Oh, you raised your hand. 1 minus 0. 1 minus 0 is 1. But on the both sides, there is still 0 and 0, right? So from a discrete level, if you regress it still ends up to 0. The limit is 0, isn't it? So, but that is great. We appreciate all of you. Maybe as we continue to finalize on what is ongoing before we just kick off the next session, we want to appreciate all of you for the good job you have done. Finding yourself here is not just to come and do a presentation, right? And as the judges have said, it's a proof that you actually prepared yourselves well. You did your homework well. I was so happy to see so many of you being very confident. Some referring to their probes, others not, and even those who did refer, you are not reading essentially, so it was a good comprehension of what exactly your take on, was it NIB Bank, right? NIM Bank. NMB Bank in Tanzania, and I also liked the dollars there, right? So, I was trying to convert them into Kenya shillings, and I was like, okay, fine. So, but again, just kudos. That is a good, professional steps that you're making. Some of the things that all of you are presenting do not necessarily relate to that particular bank in Tanzania. It up to and includes, I think I had one group that was actually comparing that bank within the regional space, right? The Tanzanian market, the East African region market, et cetera. I mean, that was so commendable. So besides the research you've done, my recommendation and my take, don't be like, you know what, we did our best, and that was it. I mean, is a going concern. I think accountants would say it so. It's a going concern whereby utilize all those models you did, utilize all those knowledge that you have acquired. If you hear there is, some valuation of a particular company in whatever sense it is, both here locally and otherwise, at least you can relate with where it is coming from. Let it not be that what you presented today starts and ends with today. That is the greatest harm you can do to yourself. So you will give me just a couple of minutes. In the meantime, you can just be whispering with your neighbor of what you learned that you will implement. So it's not just about learning. There's a difference between hearing and listening. Hearing is anything just passing through your pinnae, but listening is actually being intentional about what passes through your pinnae. So just find out from your neighbor, whatever I learned, am I likely to use it, and at what scale? You guys are presenting percentages, so scale it 1 to 10. Let's hear what your reactions are, just for a second or two. I'm not seeing engagements. And in this time now, I'm likely to in fact, let me just have my mic with myself. So our judges, you can be sure I will just pick you at random. So you better be conversing with your colleague judge of what, I mean, we said there is a lot of cross-pollination of thoughts and ideas amongst us. So there must be something that you must have learned to do next. So that's a highs and lows. I've seen a judge who is very, very listening very intentionally. Please, what did they tell you? Not now what you learned, what they told you they learned. Yeah, what they told you they learned. Not what you learned that you do. What they told you they learned that they will do.
No, of course, the recommendation for them for maybe the next session.
All right.
That, of course, maybe we should add it's instead of 10 minutes presentation, we do 15 for the team just to present. Yeah.
That's a good feedback.
You take away for that.
Okay. That's quite an interesting feedback. Let's appreciate our judges and every one of us in the room. We are almost starting off the next session, and we are going on well. Actually, we are very on time. So again, all of you have done an exemplary job, right? And none of you did lower than another. But as it is in every competition, there must be a grading system and so on and so forth. So we have a team of 6 who we want to request to move to the hosting room, which is on my far left, where we were initially. These are the ones who are proceeding for the next presentations. So if you hear yourself, but then a disclaimer, if you are not among us this team, because we cannot all be here, right? So there are some who will be here, others not. Don't let it not feel to you like we didn't do our job. No, you did. It's only that there is always an outcome after every competition. So the following teams, please move to my far left. Team I. Please, let's move to my far left. And you can appreciate them as they move. Team I. Team J, you can also join Team I to my far left. Let us hurry up. Team K. Again, please proceed to my far left, just at the hosting room. We will be calling you again now to come and make your second presentation. And when I call you, please be quick. So I've called I, J, and K. So Team N. Let's follow the same path. Team N, let's give them a lot of applause as they move out. The next team is Team L. L for Lion. So if you're Team L, yeah, I see the reaction. That's quite fantastic. Please, let's follow the suit. Yeah, Team L, please pace up. Please pace up. And lastly is Team G. Let us, I see the reaction. So, and again, even for the judge, it was very hard to come up with those 6 teams, because all of you did a fantastic job. So for those teams, please. So for those teams, please let us pace up so that we can just proceed to the next session, which is just starting immediately. Those in the room, you can be telling your neighbor just a statement or two as we just pick up. So to our judges, just be ready. We are about to just take off. So as now we listen to these 6 groups, I know I will be calling them randomly, not in the sequence that I've called them out. Please let us be attentive as we listen to their presentations, even as we listen to what the judge is going to ask them. As I said, we keep on learning a day and a session at a time. So my judges, can we start? Can I begin calling them in? Or just a second? Just a second? Okay, cool. Please just signal me once we are done. So whatever is going to be presented is in addition to what you already know. So that doesn't nullify what you know, right? I think it's also important to have that disclaimer. Whatever will be presented here doesn't nullify what you know. We keep on growing, as I said. It's just we are just doing incrementals in our knowledge and learnings, etc., etc. Judges. Okay, cool. Just a second. I'm sorry, I am back. I had gone to to breathe. You know, also being here in the front, there can be a lot of heat, so you want to take a breather also. And you see, when you take a commercial break, you also want to see how, you know, gradings and etc. will look like. So we've decided to add one more group, just to make it odd number. You know, an even number can be a little bit challenging to some degree. So we want to introduce one more group. That is still in order of how our gradings were looking like, so that that will make even the work of our judges a little bit easier. Odd number would help, right? You know, 1, 2, 3, they will always be middle. We used to call it what, median. In the even numbers, median is 1 plus 2, then divide by 2. But in an odd number, median is median. It's just discrete. So I want to call off, this should be group F. Where's group F? So group F, please again, march forward. And I think once the group F has just spaced out, we are now good to start. So you see why commercial break at times, you know, you take a commercial break, you come and you're like, fine, this is what we can do. So again, just a minute. So we are almost starting. Are we ready for the next presentation? Are we ready to kick off? Good. Just for avoidance of doubt, you know, just for avoidance of doubt. I think I just wanted to also just give a highlight. I think I will also look for some time also to go just and explain to them. Maybe at the end of it, I'll just you know just reiterate the same. How scoring was done, so that you are also informed. It's good just to be transparent. It was the judges' scorings, and there was grader scorings, and then we did average of those, right? So it's not just the judges. So it was a dichotomized scoring criteria. You get what I mean? So that is how we arrived to all those particular 7 teams in that particular order of hierarchy. We good? You got it? I know average now is easy. From the figures you've given here, average should be easy. So I think we can start off. Our judges, So I think we are good to start. Just invite the group. Invite team. Let me just a minute. Team I. So let us be attentive, as we said, just to learn from those who will be presenting, and what the judges will also be asking those who will be presenting. Is a learning lesson for all of us.
Testing.
Good afternoon. This is Team I, and we're pleased to present our recommendation of NMB, which is a buy based on a 10.24% upside and a 15.3% total return based on the following. So, macroeconomic tailwinds, which are beneficial to the Dar es Salaam Stock Exchange and NMB specifically. An unmatched profit machine, which generates net profit margins above 40% and ROE above 15%. And lastly, a high-value lending strategy, which outperforms its largest competitor on both ROA and net profitability despite less assets. Victor?
At its core, NMB is an efficiency machine. While peers focus on regional expansion, NMB dominates the Tanzanian market with a superior distribution moat. It's that 69,000 Wakala agent network, double its nearest competitor, gives it a last-mile monopoly. This last-mile monopoly drives an 85.4% CASA ratio, creating a low-cost funding model. Efficiency is digitally led, with 96% of transactions occurring off-branch. This leads to a sector-leading 38% cost-to-income ratio. These low-cost funds are invested into high-yield funds, such as the agribusiness portfolio that has seen a 41% compound annual growth rate. The increased risk from this specialized lending is offset by the region-leading NPL ratio of 2.9%. Matthew?
So looking at the industry, we've noticed consistent improvement in fundamentals throughout the 2020s. So sector NPLs are down 68% from 2020, profitability up 52%, among other metrics. And as you can see here, NMB enjoys a substantial share in all the industry success. Elsewhere, we see that NMB is either first or second in all important industry metrics. Furthermore, Porter's analysis uncovered two key risks from mobile money or MNOs and competitive rivalry from other banks, which the bank is well placed to mitigate with partnerships and integration with fintech firms and mobile money for that risk, and also increasing the asset base as well as growth in corporate and investment banking for banking competitiveness. Overall, the team verdict is a sustained advantage which powers our investment thesis, which is the following. One, combining cost efficiency with scale creates the most profitable bank and company in Tanzania, the first 1 trillion PBT company as of the latest financials, as well as exceptional margins. Second, a higher value lending strategy which channels low-cost deposits into high-value sectors such as agribusiness and MSME, and through high-value channels such as agent and digital, creates a company that outperforms its nearest competitor despite less assets, showcasing an efficiency moat. And third, as we'll come to expound on later, it is an A on all ESG screens. Julian?
Thank you. Now, looking at NMB's financials, they tell a story of not only growth, but also dominance in the Tanzanian banking sector. The bank has experienced 12.47 compounded annual growth in revenue in our historicals, and we project this to continue sustainably through to 2029. Matters profitability, they have and are projected to remain above an impressive 40%, with our ROE remaining above our 11.5% cost of equity. And investors benefit from this directly, with dividends per share growing 63% from 2021 to 2024, and we project this to continue at a 6% compounded annual growth rate through to 2029, backed by an implied 30% payout ratio. Looking at return on equity against peers, NMB was only second to CRDB in 2024, and you'll be pleased to know that in 2025, the latest released financial results, they were neck and neck with CRDB at 29%. Looking at asset quality, the non-performing loan ratio fell from 4% to 2.9% in 2024, and we project this to stabilize at 2.2% by 2029. Our equity as a percentage of total assets is going to follow, we project it to follow the same improvement trend. And finally, we ran a Camel's analysis on NMB, finding the bank to have strong capital adequacy, strong earnings quality, as well as efficient management quality, giving us a composite score of 2 with plenty of room for improvement.
Yeah, on to ESG analysis, picking up from TC3. Judges, for ESG, we went beyond just qualitative descriptions and developed a weighted proprietary scorecard where we rank NMB with a high conviction of 4.7 out of 5.0 compared to its nearest peer CRDB at 4.2 out of 5.0. This isn't just a label, it's a fundamental justification for 0.48 beta, which is a defensive one, and a valuation premium of 1.5 times price to book relative to peers. We weight social at 40% because for NMB, financial inclusion is the main profit driver. Yeah, so on the environmental front, NMB has managed to decouple its growth from domestic liquidity constraints through their 400 billion Jamii sustainability bond, which is 2.3 times larger than its nearest peer. CRDB has been able to secure DPSD liquidity through London Stock Exchange listing, cross-listing, and from development through access via development finance institutions such as IFC and BII. The 730% oversubscription on the USD tranche signals strong global trust and investor sentiment. So socially, NMB maintains an unrivaled last mile supremacy with over 69,000 plus Wakala agents. This physical and digital moat converts rural inclusion into a stable 85.4% CASA funding base. This structural advantage is the main engine behind our sector leading 38% cost to income ratio. Now governance is our main risk mitigator. With the government owning 31.8%, it ensures economic stability and alignment with national development goals. Arise BV as the anchor shareholder with 34.9% ensures ESG oversight, commercial independence, and adherence to global standards. And finally, on gender, NMB Bank is the first bank in Africa and the first company in sub-Saharan Africa to receive an EDGE certification, which gave them the expertise to launch their first gender bond, which was oversubscribed by 197%.
Thank you. So we value NMB using a blended approach with equally weighted intrinsic and relative valuation methodologies to capture both their fundamental value as well as market sentiment on East African banks. Our key assumptions include a 0.48 beta, a 10.54% risk-free rate, a 13.5% market return, and a resultant cost of equity of 11.5%. Moving on to our dividend discount model, here we project dividends based on an implied 30% payout ratio and calculate a terminal value using a 7% terminal growth rate. We then discount both these figures at cost of equity to arrive at our 9,740 Tanzanian shillings valuation, which we stress test by varying our terminal growth rate and our cost of equity to form our valuation range. Our residual income model looks at this differently. Here we start with current book value, add back the present value of projected economic profit, as well as a terminal residual income based on a 0.7 persistence factor. Our analysis yielded a 9,296 Tanzanian shillings valuation, which, similar to DDM, we stress test varying persistence factor and our cost of equity to form our valuation range.
The relative valuation anchors the overall valuation to current market conditions. The PB ratio acted as our primary lens for the valuation. We ran an ROE to PB regression, and this confirmed that NMB is superior 26% ROE and its 38% cost to income ratio justifies an efficiency premium that is yet to be factored in. We also adjusted the PE ratio for country-specific risk, and this resulted in an overall relative valuation upside of 7%.
Now, looking at the merits of investing in NMB, first is their well-managed credit risk. NMB has managed to significantly de-risk their portfolio, with non-performing loans dropping from 4% to 2.9%. Secondly, we have their strong capital advocacy position, which is backed by a capital ratio of 27.2%, citing exceptional solvency. And lastly, we look at their well-buffered liquidity that's backed with a credit-to-deposit ratio of 0.88. Now we look at the risks to investing in NMB. First is the residual foreign exchange risk, where we see that a 5% FX shock would potentially impact earnings by 83.2 million. This, however, is marginal compared to the trillions in revenue. Next is the high concentration risk in Tanzania, which they're able to balance through a deep sectoral diversification within the country. And then looking at the technology and cyber risk, we see potential net income interest losses of up to 230.2 million, which again is marginal compared to the trillions in revenue. Now, putting all this together, we as Team I recommend a buy on NMB. Thank you very much, judges.
just to clarify on the valuation, if you can just go back to that screen. What's your dominant valuation methodology?
Okay, so looking at the spread, we use 25% dividend discount, 25% residual income, and 75% price to book value, and 25% price to earnings, which we then combine with a 50-50 split between intrinsic and relative valuation. So our most dominant one, I could say, is both DDM and RAM, as well as price to book. We didn't use price to earnings as much because price to book, a bank's book value is what they're most known for.
So in summary, you can speak about the relative valuation methodology as your dominant one.
No, the intrinsic and relative are equally split. Okay. Yeah.
So for the regression, we know that the PB multiple is most useful when compared to the ROE. So for the peers that we used, we needed to adjust them for the profitability. Why did we do this? So when you look at NMB, its profitability is superior, and therefore it should justify a higher PB multiple due to its efficiency. So basically, what we did is we did the ROE is basically the independent variable, and the adjusted PB is the PB is the y-axis. So we used a line of best fit to determine the adjusted PBs, and that's how we conduct regression.
The slides on the screen. So I have a couple of questions. One, on the regression. Are you happy with 43% correlation being strong enough? The R squared is 43.88. That's on the ROE regression. The second question is the price, the DDM is quite a wide range. How confident are you with that wider range? Oftentimes we like a narrow range, as we saw with the other approaches. So what's driving that wide range? And then given that this is a listed company, did you compare some of the metrics to its actual trading metrics, like beta? So the beta you used in your cost of equity, how does it compare to its actual trading beta? Price to book, price to earnings, actual for NMB versus what you used in your valuation.
So to begin with the R squared question, I'd say we're pretty pleased with it. Why is this? As I said, NMB is, in our presentation we've talked about NMB being superior. It's superior in terms of ROE and its efficiency. So this enables us to not only have just to say we did like a relative valuation, it enables us to have an apples to apples comparison, because we have everything is standardized. Because some of the peers that we used are from, not necessarily from Tanzania, they're from Kenya, Uganda, and so it was to enhance the qualitative aspect of our analysis, we decided to run the regression.
Okay, so for the dividend discount model, your question was on the range. So when we performed our sensitivity analysis, we noticed that our valuation using our dividend discount model was very sensitive to our cost of equity. However, looking at our valuation range, we ran a Monte Carlo simulation, and this fell in the 80th percentile, our range. So, of course, you can say the range is wide, and that's why we decided not to give it a high weighting. We gave it a 25% to compare with our residual income model. Also, you asked a question on the beta. So we used a beta of 0.48, which is basically Ashwath Damodaran's take on the levered beta for emerging market banks. And we slightly adjusted it downwards due to NMB's specific defensive characteristics, one of which is a stable funding base with a CASA ratio of above 85%. 2 is DFI backing with Arise BV, as mentioned in our ESG analysis. And 3 is government backing, where the government owns 32% of the bank.
A follow-up on that.
Uh-huh.
How does the 0.48 compare to betas of listed banks in the region?
So for listed banks in the region, it is slightly lower. And why it's lower, it's basically because of the specific defensive characteristics for NMB. For CRDB, it's 0.56 and adjusted downward because CRDB is not backed by the government as much as NMB. The actual trading beta. Okay, so from sources like the Dar es Salaam Stock Exchange, it's not well disclosed, the actual trading beta. Yeah.
In the choice of the valuation models, which key factors did you consider to choose the methodologies that you did?
Okay, sorry. So for our valuation, the DDM, we chose it because we wanted to value NMB based on cash flows to investors. And we saw that in our financial analysis, looking at dividends per share growth. So it would not be good to not factor it in our valuation. For residual income, we basically used NMB due to its capital base. Mind you, NMB's capital adequacy ratio in 2024 was at 27%, which is 3 times the regulatory requirement at 10%. So those are the two main our logic behind using our DDM and RAM. For relative valuation, we basically wanted to capture what the market thinks emerging market should be worth in this economy.
Just to add on that, how does the NMB bank reality compare with its peers?
So in 2024, return on equity, they were second to CRDB with 25.2 and CRDB had 27%. But in 2025, they were at 29% with CRDB being at 29.3%. And those are the two best banks in terms of return on equity in the region.
So on the ESG bit, do you have maybe evidences to show that the initiatives taken by the bank have improved investor perception?
Yes. Can you go to the ESG, please? Yeah, so for our ESG analysis, as you can see on sustainable finance, we give a 5 out of 5. This because they are verified by a third party, that is Sustainalytics second party opinion, showing that all their disclosures are they are transparent and they adhere to the local regulatory standards. As well as for transparency, being cross-listed on the London Stock Exchange means they are mandated to oblige with the UK Financial Capital Authority. So they have global standards to adhere to, as much more than compared to just the local standards. So this gives more investor sentiment. That's why they had a 730% oversubscription on the USD tranche. They had a 230% oversubscription on the local tranche, and they had 197% oversubscription on the NMB Jasiri bond.
You focus the non-performing loan ratio and what the loan book looking like?
Okay, so for non-performing loan ratio, our forecast is mainly underpinned by the portfolio diversification for their loan books. If you could just go to the portfolio diversification slide. Yeah, so if you look at their portfolio diversification, 59% of the loans they provide is to personal or retail loanees, and 70% of this is to salaried workers where NMB is able to take repayments before the worker actually receives the salary. So that protects their credit. So for the NPL ratio, we modeled loan book growth as well as the non-performing loans as a percentage of loan book growth, basically.
I'd also like to add that the NPL ratio in reality has actually reduced because for the published financials that they released last week, the NPL ratio is actually at around 2.6, indicating a 0.3% drop. Thank you.
Good afternoon, everyone. This is Team K, and my name is Eric Moreithi, and beside me is... And we're here to our valuation for NMB Bank. We recommend a buy with a target price of 10,729 from its last close of 8,427 as at 2nd January 2022, giving an upside of 27.32%. So we'll start with a brief description of NMB Bank.
The National Microfinance Bank was founded in 1997 after the breakup of the old National Bank of Commerce. In 2008, they offloaded 21% of their shares to the public through an IPO, and since then it has been listed on the Dar es Salaam Stock Exchange. They have commanded a 20% market share, and their business model is efficiency, digital dominance, and they have also been able to digitize 96% of their transactions. They have also issued 500 million shares. So we've looked at what NMB is, but we have to ask ourselves, why should we invest in NMB? The first reason for that would be their dominant market position, followed by the competitive advantage. And as you can see from this geomap, they have 240 branches distributed all over Tanzania, and these two reasons pose a low threat from new entrants into the market. The third reason would be their growth in strategic niches. For example, wholesale banking, where they've been a financer for certain projects like the Julius Nyerere hydropower project, and the SME sector, where they introduced Mkononi Biz, which led to app-based lending, as well as the agribusiness sector, where they incorporated the agricultural marketing corporations, as well as the warehouse receipt system. So now we can look at their management quality, where they have deep industry expertise, a proven track record, international governance, as well as being voted Tanzania's best bank in 2024 and 2025. Then it's very important to mention the ESG aspect, where for the environment, they issued a Jamii bond. For the social aspect, they were able to issue a Jasiri bond. And for governance, 36% of their board is made up of females. So the following, okay. So for the next point is the superior credit rating of Tanzania. As we can see from Moody's and Fitch's rating, the outlook for Tanzania for the past couple of years has been stable. So we've seen why we should invest in NMB, but why should we buy?
Thank you for that, Lola. So our recommendation is predicted along the lines of a market disconnect. So we came to our 12-month target price of 10,729 Tanzanian shillings by evaluating three major methodologies: the residual income method, the dividend discounted method, and the relative valuation method. I'll focus on the residual income method, which we weighted at 60%. We did this because of the nature of NMB's business. They're a bank that has a high return on equity. Next, I will focus on this graph on my left. As you can see, we've labeled where the current price was at, which is around 8,400, and now our target price. And we also decided to compare this to the dividend discounted model. When we evaluated the dividend discounted model, we saw that it was at 7,900. Why the comparison between the current price and the dividend price, you may ask? Because this shows how the market has been misinterpreting NMB as a company. Most investors have been looking at it as a dividend payer, but not really as how the company reinvests its capital back into the investment and eventually generating economic profit for its stakeholders. On the next slide, we'll talk about our management alpha, the integral part of our thesis. So this is basically the value created above and beyond the cost of capital. And to stress test this, we had quite a high cost of equity, but NMB showed that they can overcome this hurdle with an economic spread of 5.1%. So now I'll hand it over to Eric to tell you why you need to buy now.
So my colleague has shown that NMB is clearly generating a massive economic value. However, the right timing is key. And to answer this, we have to look at the structural performance and financial performance as well. They have reduced their cost-to-income ratio to 15% below their regulatory cap. This has been achieved through the 96% digital transactions. They have also de-risked their funding, not only in the 2 bonds issued, but also in strategically choosing the government securities, thus increasing their interest income. This has created a massive profitability, as you can see. The compounded annual growth rate is about 33% between 2020 and 2024. Comparing that to the assets, which is at 18%, we can see a superior profitability. This is really great. And looking at their Q3 reports, we can see that they are matching to our full year expectations. 92% of the total assets has already been achieved. And also in the loans and advances, they are nearly matching our full year expectations. In both qualities, they are currently number 2 in both of them, in Tanzania, as well as top 5 within East Africa. And the asset growth is expected to exceed that historical growth rate. We expect them to be greater than the liabilities. So it is a massive liability growth. However, we need a realistic timeline. So why hold for 12 months?
Thank you, Eric. So to continue on our discussion, our strategy was mainly after buy now, we recommended also to hold for up to 12 months. This is mainly because we saw this time period to be sufficient and the most opportune time to have realized benefits from, one, the earnings growth, the dividend income, operational efficiency improvements, and the valuation re-rating of our current price. Some of the factors that continue to support this strategy of ours is, one, the forward earnings growth. We saw from our analysis that that NMB has an accelerated forward earnings growth of around 26%, which later moderates to around 24%. So during the holding period, we are going to be seeing a positive market reassessment, and also we see that the earnings will be accelerating. As well as, to add on that, we have the forward return on equity. So for this, we can see that the current return on equity moves from around 25% to around 40%. So this continues to support our point on that NMB has improved profitability during the holding period of 12 months. The next point is on the current price versus our target price. So for this as well, we can see that the stock offers a potential upside of 27%, which clearly shows that the NMB will be having an increased value during the 12-month holding period. And every investment has a few risks associated to it. Some of the risks that we were able to identify is, one, the macroeconomic changes in Tanzania, two, the social and political risks that might affect the yield on the government bond that NMB is investing in. And lastly, there's the deterioration of the credit rating of our customers. And some of the ways after our assessment that we could mitigate this is, one, we have put a safety margin such that even in a bear case scenario, we will still be able to realize a value of around our target price. And also we could continue to invest in sustainable non-interest income, just so that we are not affected in adverse changes in interest rates. And also we can maintain the bank's structural efficiency to limit us from aggressive lending. Thank you so much for the presentation, and we're for any questions that you might have.
Hi, thank you for your presentation. So what is the level of write-off compared to the total loan book of NMG? And how do you think this would be contributing to the NPL ratio trend going down?
Thank you for that question. In terms of, maybe I can generalize in terms of the non-performing loan ratio. We calculated it based on their historical, cumulative historical information. We saw that currently in 2024, their non-performing loan ratio was at 2.9%, and previously it had risen up to 3.6, and we expect that by 2029, which is our final year projection, we expect it to be reduced by at least 0.2%.
So my question is, what's the level of write-off, and how would it be contributing to the ratio trending downwards?
Yes. The level which we determined was a bit more qualitative because given the fact that there were a lot of social factors and political factors that affected NMB, we had to look at what is the expected credit losses that they might face. Yes.
So our weights were 60% residual income, 20% dividend discounted model, and 20% relative valuation model. I think there may have been an error with the graph, but the residual income model was actually, the intrinsic value was 13,000, and then the intrinsic value for the dividend was 6,000, 7,000, and then the other one was, the relative valuation was 6,000. So when we averaged using that, that now came down to this 10,000 target price, yeah. Yes.
Hi, thank you for the presentation. So, out of all the risks that you've mentioned, which one is likely to materialize and how will that affect your recommendation?
So upon our analysis, the risk that we saw that could most likely materialize was actually the macroeconomic risk. This is just based on everything that has been happening in Tanzania. Yeah.
So how does that affect?
How does that affect
your recommendation?
So for us, again, as we had stated in our presentation, we had recommended to buy, and then now after buying, we hold for a specific period to realize the benefits during this period. So for us, what we would say towards this is, if the macroeconomic changes shift against us, we would be leaving early. Yeah.
I would say, unfortunately, to contradict what she said, I would say hold, because you look at the nature of NMB, and it's a bank that within the region, a lot of people, when there's a lot of instability going on, governments, people with businesses, they like to bring their money there. So I would say hold and wait it out if the macroeconomic conditions show. So our recommendation will go from buy to hold. Yeah.
Okay.
Sorry. In the risks that you portrayed, I would like to know what is the most inherent risk and what is NMB Bank doing to have a competitive advantage on the risk?
In terms of the most inherent risks that they may face, I feel like first, the digitization that they are currently undergoing, one of the biggest risks that they may face in that is first, the operational theft and also the system failures that they might face. Currently, last month, as you saw, they partnered with Mastercard Foundation. That is one of the best ways that they did to mitigate their risks. So Mastercard is currently a secure digital transaction channel which they partnered with to use.
My other question would be, how exposed is the bank? How exposed do you think the bank is to the government securities concentration risk, bearing in mind that the government of Tanzania is 80% invested in the bank? So how do you think the government securities concentration risk is in relation to this bank?
Okay, I can start off. First, from our analysis, as of 2024, 61.5% of their total assets was from the interest income. So as you could see, their government securities was heavily invested. However, they have also invested in non-interest income. An example is the Upanga Joint Venture Capital, which they invested in. So this all helps them to reduce their risk in terms of the income that they get to generate. They have an 88% stake in that venture, and in other different opportunities, such as the vertical integration that they perform within Tanzania. They mostly focus from the SACCOs, the small-scale farmers, and also to other different cooperatives. So it's not just within the Bank of the Tanzanian government, but in others.
Also for that, they have other sources of funds. For example, their non-traditional bonds, the Jamii bond, the Jasiri bond, as well as deposits. So they don't just rely on the funds that come from the government.
Thank you for the response. A final one. it being a leading bank in Tanzania, do you think it has reached its full potential? And if not, what is that one main catalyst that you think would improve? They would implement to improve the value within maybe the next 12 to 24 months during your whole recommendation?
The main catalyst that I'd say will make the market to realize it in the 12 months' time is what my colleague had mentioned, is one of the biggest factors that she said. Currently, NMB Bank, most institutional investors are more focused on the dividend payout because out of the other banks within Tanzania, NMB has a strict dividend policy of 33% payout ratio. So they released about 459 Tanzanian shillings in 2024 per share. However, there is more efficient value outside of the dividends that is being generated. This is one of the key things that needs to be realized and needs to be focused on. That there's more efficient value creation, there's the digital transformation, and there's other major factors outside, for example, in its profitability as well.
So you also mentioned briefly some initiatives that the bank is doing towards ESG. So how do you think these initiatives have affected their loan performance?
So that I would say is the governance, the strict oversight. So the NPL is at 2.9%, which is lower than its competitors. And okay, could you repeat the last part of the question?
So how do these initiatives affect their loan performance?
So, okay, they make sure that they get the loans that they give out are high quality loans, as well as to the government, which is less likely to default. So that also helps them maintain their 2.9 NPL.
Maybe just to add also, they have also included more people in their initiative for financial inclusion. They've increased the number of people, or rather the categories of people that they are giving their loans to, which is also a good thing. Yeah.
For the loan performance as well. Okay, for the loan performance as well, they use data-driven credit, especially to the SMEs. So they look at the past transactions that they've done to be able to evaluate if they should be able to give them loans or not, instead of just giving them that.
Thank you.
esteemed judges, ladies and gentlemen, welcome to our presentation of NMB Bank PLC. Our coverage dictates we issue a buy recommendation with a target price of 10,726 Tanzanian shillings, equivalent to $4.29, a 32.43% discount from the close price. We issue this recommendation after a thorough analysis of NMB's business model, financial statements, and risk affecting the business. Our recommendation is based on 3 key facts. One, that NMB has a vast physical network across Tanzania, giving it a 97% coverage across Tanzanian districts. Second, NMB has been able to demonstrate great financial metrics and established itself as an ESG leader across the ESC region. We believe that the market has highly undervalued NMB with a PE ratio, as it currently has a PE ratio of 4.13, while the market average is 5.3.
Next, as you will see in our presentation, we'll be looking at the business overview. Before we get into the valuation and numbers, it is important for us to understand how NMB actually makes its money by looking at the 3 core segments of NMB. We'll be looking at the retail, which is the backbone of NMB's operations, and how NMB initially, when it started, was a microfinance bank. So they have significantly delved into the retail banking, which is 59% of their operations. Then wholesale banking, which normally is usually a CRDB thing that they have expertised on, but they have been able to get a 40% compound annual growth rate and have been able to get a profit for the first time in 5 years. And we have the treasury, which is able to manage risk and liquidity and get excess returns on excess funds.
To better understand NMB position in the Tanzanian economy, we have to look more up from the global perspective. The global GDP, according to World Bank resources, the GDP for the global is at average of 3.2%. When you go to East Africa, the average GDP was 5.7%, while that of Tanzania, the Bank of Tanzania forecast the GDP of Tanzania to be 6.0%. While the inflation of Tanzania is at 3.1%, while the average is at 3.4%, giving that many consumers in Tanzania have a high disposable income, meaning that the customers can put more money in NMB Bank and in the Tanzanian economy.
Okay, so drilling it down to the financial industry, the Tanzanian banking industry is concentrated among few large players, with the banking industry accounting for 97% of the total banking assets. This represents 20%. It contributes to 20% of the GDP in Tanzania. Now looking at NMB Bank, NMB as of 2023, its market cap stood at 2.2 trillion. And by 2025, it had increased to 4.05 trillion. This signals an 80% increase, and also it signifies that there is increased investor confidence as well as increased profitability.
Our recommendation is backed by 3 key investment theses. One being that NMB operates in a duopolistic market with minimal threats of competition. NMB currently operates one of the largest physical networks across Tanzania with over 69,000 Wakala agents, 714 ATMs, and over 243 branches. NMB has been able to leverage this vast physical network to engage more with their customer base. They have been able to get greater insights into their market, especially in their agricultural value chain, as they've been able to use the Wakala agents to currently screen the farmers, to enable them to actually give them better loans and better high quality loans and at a fair price. Also, NMB has been able to utilize the fact that some of the villages in Tanzania, or some of the population in Tanzania, is currently highly unbanked. In 2024, they were able to leverage on this physical network to tap into 2,000 unbanked villages. Using the Pesa account, which you only require 1,000 Tanzania shillings to open, they were able to onboard over 300,000 customers, contributing to an overall 1.85 million new customer acquisition in 2025 and a 20% growth in customer deposit. Our second investment thesis is that NMB has been able to heavily invest in digital transformation that has been able to cement its position as a digital leader. The digital and banking sector is currently expected to grow at a 12%, with annual transaction expected to grow at 19%. NMB has been able to leverage this through the issuing new digital products, such as the NMB Mkononi Super App. They have been able to leverage this NMB Mkononi app to diversify its revenue streams. In 2024, the transactions volume through the NMB Mkononi app rose to 109 billion, a surge representing a 25.4% surge. Also, NMB has been able for them to maintain its current position as the most profitable bank in Tanzania. They have implemented costs minimizing measures, such as the implementation of the Jirani AI chatbot, the Mshiko Faster program, and the introduction and implementation of 16 new automated robotics, which has been able to allow customers to access NMB services without having to physically visit their branch. This has allowed NMB to divert its staff to more value-adding activities, increasing the revenue per staff to 4.25%, and the cost-to-income ratio to decrease from 38.3% in 2024 to 37% in 2025, closing date as of 31st December 2025. Our third investment thesis focuses on NMB being an ESG leader across East Africa. NMB has been able to leverage on sustainability financing. It launched two sustainability bonds, the Jasiri bond and the Jamii bond. The Jasiri bond, which was the first ever gender bond in East Africa, was oversubscribed initially by 197%, and the Jamii bond was oversubscribed by 284%. The funds generated from the Jasiri bond were able to finance over 3,000 women in their SME businesses. NMB's leadership is also comprised of well-seasoned leaders who have an average tenure of 17 years in the banking industry. Thus, they're able to, with their well-seasoned and the expertise in the industry, they're well equipped to drive the strategy of the bank forward, maximizing on shareholders' value.
Now, into financial analysis. As you can see, the NMB profitability projection is expected to be at around 32 trillion Tanzanian shillings, and the CAGR for that will be 26% going forward. And as you can see, the industry average is expected to be at 27.6%, which is above the industry average of 23.6%, showing that there's great return on every average on every asset investment. As you can see, also return on average asset is at, as you can see, is at 5%, which is above the industry average of 3.1%, showing that there's a high return on asset going forward. The non-performing loan ratio, we expect as of 2024 was 2.9%. And one of the key, and the loans and advances is expected to be higher. We expect the NMB Bank to be the leading bank in terms of loans and advances by 2029, surpassing CRBD Bank. While that capital ratio management, we expect at NMB is currently at 27.8%, while that of the government requirement is at 14.5%.
Okay, now looking at the ESG analysis, environmentally, NMB has been able to install 100% LED lighting in all its facilities. This has led to reduced costs and also increased their operational efficiency. Also, the 1.2 million trees that have been planted, and the 1.13 million carbon dioxide emissions it's been a reduction of 92% from 2023. Socially, NMB is focused on people and productivity. So in 2024, NMB invested 5.6 billion on staff training, and 4.3 billion as of 2025. Governance-wise, NMB is led by a group of an independent board of highly seasoned leaders who lead to where there's diversity of decision making.
Our valuation was based on, we arrived at a target price of Tanzanian shillings 10,726 using 3 key valuation models: the DDM model, the residual income model, and the relative valuation model. We used the DDM model and assumed a cost of equity of 20.24% with a terminal growth rate of 5%. The DDM model yielded the least implied share price, and we awarded it at 20% weighting in our valuation. We awarded this weighting because we believe that we currently know that the debt to equity ratio for NMB is approximately 50%, and if it were to take on more debt, it will significantly impact the dividends.
A question. That was a good presentation and articulated it. So my first question is, what is NMB's market leading product that you've identified, and what are the significant exposures that you've seen?
Significant risk exposures.
Yeah.
So currently, we know that NMB has implemented some key strategies. One of them being their digital strategy. In 2024, they invested over 46 billion in digital transformation, leveraging it on their digital products such as Mshiko Faster, the Pesa account, the Mkononi Super app, and NMB Pay by Link. There are various digital products. Also, they're leveraging on wholesale banking. We mentioned at the start of our presentation that wholesale banking has been making losses for approximately since 2020 up until 2024, where they got a turnaround. So they're heavily investing in their wholesale banking division, which is currently being led by CRDB. So they're implementing more strategies on giving out high quality loans to corporates, able for them to to maintain the current profits they have realized in 2024. We also that cyber risk was part of one of the significant risks that we saw when doing the equity risk assessment of NMB. As you all know that in 2024, there were 2 outages, the Cloudware outage and the AWS outage that affected numerous internet banking services across the world. So since heavily did operations, it was a high significant risk that anything might happen to it. If the outage happened, it would significantly make cause an impact and make them lose revenue that were accounted on that day. Similarly, there might be risk for them being attacked by hackers. The fact that their systems are highly digitized loans, it's quite a significant risk in our opinion.
Also, to add on to that, on the point of significant progress they have, NMB, given that Tanzania is expected to have a population of 118 billion population as of 2050, and the huge part of population is underage, NMB has launched a product called NMB Go. They majorly target young, youthful citizens of Tanzania, and if they grasp that population at a very young stage as a high growth company right now, going forward, NMB is going to have a huge market share in terms of assets, loans, and also in terms of customers going forward.
Okay.
Thank you for, sorry.
Okay, one more. Yeah, so from an impact lens, how does NMB fare to its current pricing, and how can it leverage that for an upside potential?
How does NMB fare on its current pricing?
Yes, from an impact lens.
From an impact lens.
Yeah.
We definitely see that investing in NMB is a buy recommendation from us. Why you might ask us is the fact that it's in a high growth market. From our presentation, we noted that it was a 32.43% discount as of 30th September 2025, giving us an implied share price of 10,726. With all the increase and with all the fuss and all the investors' concerns on impact financing, the fact that NMB is currently owned by a Rise BV, which is a highly sustainable private venture, they have been able to actually implement various sustainability measures that might be of concern to an investor such as yourself, such like implementing the first ever gender bond. They're currently, among the Tanzanian banks, they are the few, NMB, CRDB, and NBC are the ones who are actually implementing providing sustainability reports, with NBC currently only offering a sustainability segment on its annual report. The fact that it's investing highly in its workforce, such as in last year they invested last year as of 30th September 2025, they invested 5.6 billion in training their staff. So, and the fact that all their senior leadership have all held senior positions in other banks, such as Ruth Saipuna, who was CFO for Standard Chartered prior to joining NMB and becoming the chief financial officer. They have vast relevant experience in banking industry, and they're well equipped to drive the governance, to implement the required governance principles in the bank and actually drive the bank forward, and it might be of higher importance to an independent investor.
Thank you for your presentation. I think time may have cut off because you are trying to really get us deep into your presentation. My question is around the digital lending. You mentioned that they have a quality book because of the investments they've done in the digital space. So what proportion of that is contributing to the NPL ratios?
To the NPL ratio. Currently, that's a great question, thank you. Currently, NMB actually invested in an automated credit bureau system as part of their larger digital strategy. The automated credit bureau system is able to screen a customer prior to them being offered a loan. They're able to see if you're a high-risk customer or a low-risk customer, enabling it to actually reduce their NPL ratio to 2.9% in 2025.
Also on non-performing loss ratio, the NPL, as you have seen, it is at 2.9%, which is way much low above the industry average of 3.2%. As my fellow has said that the other thing that NMB is doing to have a low and an NPL ratio is that they have a credit board, dedicated credit board committee, which majorly deals with credit policy, credit standard, and credit portfolios. And also another thing, they have a wide reach of Wakala agents in which they can roll out these Wakala agents to oversight the loans which they have issued to personal loans to their customers. Another thing is they have implemented IFRS 9. IFRS 9 was introduced in the banking sector of Tanzania by regulators on the 1st of January 2018. And since then, when IFRS 9 was made mandatory by the regulators, the NPL ratio has reduced from 12.74% in 2017 all the way to 3.2% in the industry average. And since NMB has taken into account that and implemented IFRS 9 deeply into it, they've been able to maintain over the years, for the first five years, to maintain a low NPL ratio as compared to their customer. Another thing also, regarding the credit risk and the NPL ratio, is that NMB Bank started as a national microfinance bank, meaning they majorly dealt with personal loans and everything. And since that, when in 2008 and 2005 NMB was given a charter to become a commercial bank, they were able now they already had an established credit system and the automated credit system bureau, which they are able now to access quick loans, how they are performing already, and they are huge markets when it comes to personal loans. And when they are given that charter, they've been having an edge as compared to CRBD Bank, which has never been more into that market. Also, if you look at the non-performing loans, the loans and advances, we say that we forecast that NMB by 2029 will surpass CRBD Bank to become the most profitable bank in Tanzania. The major reason, the major driver of loan NMB is that as of last year, 2025, effective lending rates to personal loans for NMB Bank was 13.78%. and that of CRBD was 17%, and that of the industry average was 15%. Since NMB Bank has a lower lending rate, many people, low-income people in Tanzania, are able to take more loans, and that is what is driving NMB Bank going forward. And also, given that 30% of GDP of Tanzania is about agriculture, NMB Bank last year launched something called 100 Investment Fund, 100 billion investment fund, where they're giving loans between 1 million Tanzanian shillings all the way to 1 billion Tanzanian shillings to farmers only at a ceiling rate which is at 10%. So meaning they have given a strategy whereby they're driving their loans book loans higher than NMB Bank. Yeah. CRBD, not NMB.
So they have always taken a defensive approach in offering their loans, hence their lower NPL ratio as compared to other banks. So they have always prided themselves in having a higher quality portfolio as compared to their other banks, hence why their NPL is significantly lower than the industry average in Tanzania.
Thank you so much for your time.
Good afternoon. This is Team J, and we are about to present on NMB Bank. Now, this first slide paints a pretty picture of NMB Bank, but none of it will be relevant without context. And that's why allow me to take you through the context of our valuation. So the banking sector in Tanzania is a concentrated duopoly, with NMB and CRDB controlling 48% of assets. This leads to market dominance, which gives them pricing power, and deposit stability, which their smaller peers cannot replicate or compete with. And now going to the macroeconomic landscape, tailwinds have shown that 6% GDP growth quoted in 2025 has been achieved, and this leads to, it shows up practically in increased credit demand, for example, in sectors such as agriculture. And finally, to look at the industry overview, their non-performing loans are at 2.9% compared to the industry's 4.4%, so they are growing at a relatively safer rate than their peers. Now let's zoom in and look at NMB Bank. The question is, how do they translate market dominance into shareholder value? They do this in 3 ways. Unrivaled reach, 4 million plus customers. This is a solid deposit base to fuel their margins. Secondly, they have quality revenues. 38% of their income is non-interest income. And finally, while they are the second largest holders of assets, they are the most profitable in the sector, capturing 30% of sector profits. So we have a duopolistic structure in a growing economy with the most efficient operator, that is NMB. Now we can zoom in into our valuation.
So we have a strong buy conviction for NMB Bank. 26.9% uptake increase. So meaning that the reason why we see this is because of strong structural compounding and also transparent and resilient earning capabilities. So the main factors that we're looking at which offer this growth is the structural margin advantage, then also the digital-led opportunities, and also the resilient balance sheet. The target price that we have is 11,153 from a buying price of 87.90. So when we look at the NIM of the bank, what this incites is that it doesn't support just shorter market conditions, but it also supports a strong and resilient balance sheet. With these factors, we have 3 main factors that are going to increase this NMI. So ideally, we look at the funding structure. We have an 85% CASA base, meaning that there's going to be low deposit costs and low matching costs. Then we also have a structural asset, our structural assets, meaning that there's also going to be a granular and short-term based loaning system. Granular meaning that they deposit, they give out loans in small quantities to a large population of people to reduce default risk, while also the short-term duration basis now, they also shorten the duration period to also ensure better default, less default, sorry. Then there's also liquidity discipline, whereas they take excess liquidity and disperse it out so they can remain flexible and also competitive. So here when we look at digital dominance is one of the main drivers for NMB Bank. We're looking at the 2 jaws. This is called a jaw widening trap. Ideally, the top blue line represents the revenues. The revenues are going to outpace the yellow line, which is the costs. So that we're seeing higher costs, we're seeing lower costs while we're seeing higher revenues, and we're seeing a declining cost to income ratio, meaning that the costs are decreasing while income is increasing, which shows profitability. Then lastly, when we're looking at the valuation, we're going to talk about the fact that 50% of this bank counts its loan base on back to salaries. So for you to be able to get we have seen with the data that 50% of the loans given out are back to salary, meaning that there's less risk of default, and we've also seen they have an industry standard less NPL, which is at 2.9%, which the industry standard is at 5%, showing a higher profitability and overall more income.
ESG is no longer about ethics, it's about strategy. Sustainability is a financial decision. National Microfinance Bank is a market leader in terms of its ESG initiatives. It operates one of the biggest bonds in Africa, which is called the Jamii bond. Under this initiative, $74 million has been issued, and that is 212.9 billion Tanzanian shillings in the inaugural state. But as today, this value is at $147 million, and that is about 100 That's about 147 million US dollars that has been issued, and then it's an overall value of 400 billion Tanzanian shillings to date. Under the same JAMI bond, what we know is that Euromoney issued the best sustainability bond, the best sustainability award to NMB Bank because of its proficiency in terms of the JAMI bond. And JAMI listed under the Luxembourg Stock Exchange in 2024 April and the London Stock Exchange in 2024 May, as well as the Dar es Salaam Stock Exchange in December of 2023. We also have the Jasiri Social Bond, which is for women-led enterprises, MSMEs for women, and it funds projects that are related to green financing and blue financing, including pollution prevention, green buildings, water sustainability management, and issues to do with green sustainability. Additionally, NMB commits 1% of its profits after tax every year to corporate social responsibilities. And from this, we can tell that NMB Bank is dedicated to longevity, and it is focused not only on short-term profits, but it cares about what customers, the investors, and the community will benefit from the company. And then we also have our valuation. Under our valuation, we used 4 main methods. We used the dividend discount model, we used the residual income model, we used the price to earnings model, and we used the PB model, each of which was given a weighting of 25%. Under the RIM, we found a value of 16,195, the DDM was 12,409, the PB and PE gave 7,992 and 7,565. And overall, what we found was a target price of 11,153.33, which is an upside of 26.9%. And based on our recommendation, if it's greater than 5%, if the upside is greater than 5%, then we recommend a buy. So we used all these valuation methods because some of the methods in themselves have deficiencies, but when we combine them all together, they create a powerful tool to give a collective investment valuation from different financial perspectives. So the dividend discount model is sensitive to a lot of variation in terms of the dividends, but the residual income model is able to compensate for this, and the PE and PB as well work together to come up with our blended target.
So looking at investment risk, so looking at investment risks, now there are several risks that are associated with capital allocation to NMB Bank, but the 2 main ones that we look at on the basis of significance and probability of risk are currency volatility and competition from fintechs. So for currency volatility, as you can see, the Tanzanian shilling has experienced great volatility against the US dollar in the years in the past, and this is mainly because of macroeconomic pressures such as political instability and forex reserve shortages. So what this has done is increasing the systematic risk in the market and actually reduced investor confidence, which is why you see a drop in foreign investments for the NMB Bank. Now, looking at fintech competition, the financial ecosystem is rapidly moving towards digitization, and the shift poses a competitive threat to the traditional institutions like the NMB Bank. So what has happened is that these fintechs are able to onboard unbanked individuals and give them access to financial services, maybe through their mobile apps. And NMB has actually not taken this lightly and had very heavy digitization, implementing their own mobile banking platforms so that they have, so as to enable regular Tanzanians all across to have access to their services. So looking at the loan portfolio, it's highly volatile and it's very sensitive to 3 specific factors. 1 is GDP growth, 2 interest rate changes, and 3 NIM and loan growth assumptions. So for the GDP growth, an increment in the GDP actually leads to an increased demand for debt services in the country, and what that's going to do is increase the interest earnings for NMB Bank. For interest rate changes, it works both ways. So for an increment in interest rates, there's going to be an increased interest earning for the company, and for reduction, it will be a downside. Now, for NIM and loan growth assumptions, for the NIM, an increment in the net interest margin leads to a growth in the net income. And for the loan growth assumptions, because this is a bank, majority of its assets are based on the loans, so an increment will have a very a decrease would have an adverse effect on the balance sheet. Yeah.
Therefore, having built our case for NMB, we look at 3 reasons the market has underestimated them. 1, they are an underpriced market leader with a strong digital franchise and a fortress of a balance sheet. Therefore, to the investor, we have a high conviction buy recommendation at a target price of 11,153 Tanzanian shillings, where they will achieve a 26.9% upside. Thank you.
What's your single most important driver towards your recommendation?
Okay, so the first part that we can talk about is our main recommendation guide that we started off with. If the price that we estimate that the upside is greater than 5%, then we recommend a buy. If it's between -5% up to 5%, then we recommend. If it's -5%, then we recommend a sell.
So I have a question for your DDM. I just want to understand your rationale behind the terminal growth, the rate you use for terminal growth. If you could just.
So for the terminal growth, we used actually 15.02%. And the reason for this figure was because as of now, the banked individuals in Tanzania are 22% of the population. So you see that there's actually over 70% potential market that are here. And ideally, based on the fact that they have very large access to capital, government support, and also the strong digitization in the country, it's very plausible to say that there's going to be very high terminal growth for the next maybe in the near future, we can say, yeah.
In terms of the numbers, we multiplied the row, the return on equity times the retention rate. So the return on equity was taken for the period of 2021 to 2024, and the average of this was found, and then forecasted over the rest of the periods. So we found the return on equity after valuing it like that. And then after we did that, we also did the retention rate, focusing on a dividend payout ratio of 25%. Then the retention that would be left was 75%. And at this 75%, we multiplied it by the row, and we came up with 14.02% after multiplying 18.7 times 75%.
So we had mentioned about the 14% where we're talking about the untapped market. So you know what we saw in the market in our constantly digitizing era, we are able to see that there's potential for growth because this is unbanked potential for growth, and we're seeing the trajectory of the company. Because as analysts and before we make a decision, it's more about the direction of the company rather than the actual figures right now. The actual figures play a huge place on it because we're looking at both the micro and the macro factors. So when we look at the DDM, when we look at our 14% terminal growth, that has been as per our calculations. So the growth currently right now is a little bit slower, but we expect an upside because also the lag of the industry, we expect it to catch up because of all the potential upside with all the macro and microeconomic factors.
just to add on to him, to finish, sorry, the company itself, NMB, is undervalued, and the whole industry, or rather the Dar es Salaam stock exchanges are wholly undervalued. And if you look at our valuation, we didn't just focus on one key driver. For example, oh, we saw terminal growth is excellent. Yes, it's a buy. Or oh, we saw as our judge asked, what's our one most important thing? It wasn't a singular point. So we really did a blended valuation. And also another question you might ask if you look at our report, why is our residual income model price almost double the actual stock price today? But that's because it's pulled up. Well, it's okay. Residual income model measures the spread between cost of equity and return on equity. So NMB's return on equity is 18.7%, and their cost of equity is 19.62%. So that spread shows up in a larger way when you model it with the residual income model, and that, as we averaged it, 0.25% on weighting on each of the 4 models, it pulled up our average. So as you've seen, we've really taken a balanced look over all of our valuation metrics, hence our buy recommendation. Yeah.
Help me help us to go for lunch. We're not done by 12. Okay. So 3 groups in maybe 5. Let me see that your pal.
If you had the opportunity to invest in a bank that shows steady growth, gives out steady returns, and has millions of loyal customers, would you take it? Today, my team and I will be explaining to you why NMB Bank PLC gives out this exact opportunity. We offer a buy recommendation at a target price of 10,911 Tanzanian shillings from 9,060 Tanzanian shillings. Now, this bank was formed in 1997 following the restructuring following the restructuring of NBC. It is located in Dar es Salaam, Tanzania. It's the leading commercial bank in terms of deposits, and it's second by assets. It provides services such as retail banking, wholesale banking, and treasury services. It has also extended its banking services by extending the agent and branches network and digitizing its transactions. All these results show that NMB shows strong potential of future growth.
Next, we move on to the Tanzania's banking sector. Tanzania's economy is growing at 6%, driven by multiple factors as well as rising private sector activity. NMB has 25% market share, with its biggest competitor being the CRDB. NMB is strategically positioned, therefore enhancing growth. This growth is investable due to its stability. Inflation is low at 3.1% to 3.3%. The broad money supply is expanding at 10%. Looking at Tanzania's market, 50% of the entire bank market is majorly controlled by two banks. That is the NMB Bank and the CRDB Bank. Moving on forward to financial performance, 5 years ago, NMB was a strong bank, but not yet the profitability machine it is today. In 2019, it generated a revenue of 727 billion. Fast forward to 2024, this revenue doubled to 1.6 trillion. This kind of growth does not just happen. It came about due to a steady loan expansion. Looking at profits, from 2019 to 2024, these profits have not just grown, they have quadrupled from 145 billion to 647 billion. While we look at the margins have expanded from 19.9% to 39.5%. This shows that this growth is not just temporary, it is a scalable and disciplined growth. Now, profitability is impressive, but what really validates our buy recommendation is the balance sheet strength. Looking at the balance sheet, the loans and advances have grown from 3.6 trillion to 8.5 trillion and now 9.5 trillion. This shows that there is a high demand for credit. Looking at the customers and customer deposits, they have grown from 4.9 trillion to 9.4 trillion and now 10.9 trillion. This shows that the growth is fully funded, not just exaggerated or aggressive. And most importantly is the shareholders' equity. Shareholders' equity has grown from 1 trillion to 2.6 trillion and now 2.9 trillion. All this capital buffer shows that NMB is growing while still retaining its resilience.
Above is Sankey with projection of our full year results 26 that shows our projection from income all the way through to profit. We project a 1.7 trillion in interest income all the way to 900 billion, thus showing that NMB is a continued bank that continues to show strength and resilience in the sector. From this, we also compared our 2025 forecast with the actual released 2025 results, and where we saw that our modeling approach generated an 8.3% mean absolute percentage error, thus validating major of the metrics that we had, having 50% of them having an error of below 5% and 30% around 5 to 10%, 80% of excellent metrics accuracy, thus validating the modeling approach we used and also the valuation methodologies. Onto our valuation, we used the DDM and relative valuation, namely PB and PE. Under DDM, we got an implied price of around 11,000, whereby this was due to an upside of 21% with key assumptions. We used cost of equity being at around 21.25% as a result of the ERP and risk-free rate of 10.7 to 10.25%. We used a conservative terminal growth rate from the GDP projections, which was 6, now ours was a bit conservative at 5, and a dividend payout ratio 33% of the historical average. Onto PE, we got a price of roughly 10,000, an upside of 10%, based on the average of the regional peers, And also on PB, we used 1.54x based on regional peers as well, and we gave this the highest rating because NMB is an asset-heavy bank, thus relied heavily onto this and getting an upside of roughly 21%. Our blended approach yielded an implied price of 10,901, implying a 20% upside on NMB, thus a strong buy onto ESG.
We now turn to ESG, which we assess it as not as a standalone sustainability inclusion, but as a risk and value driver for our investment thesis. Overall, NMB Bank demonstrates strong ESG profile, with social and governance being key strengths and investment risk that is an environmental risk that is manageable. On to the first, environmental factors. We rate NMB Bank as medium to strong. Okay, the environmental exposure comes from the agriculture and SME portfolio, which we see is also vulnerable to climate-related risks. However, NMB Bank has taken meaningful steps to mitigate these risks. This is through the Jamii Sustainability Bond, which has been able to mobilize around 212.9 billion Tanzanian shillings plus 73 million USDs, which towards the renewable energy, climate resilient agriculture, and also social infrastructure. On to the next, social factors. Social factors represents NMB's strongest ESG pillar. NMB Bank has a central role in financial inclusion in Tanzania. That is it serves over 8.6 million customers, with 96% of the transactions conducted digitally. We also have the extensive agent networks, which has been able to penetrate deep into the rural and undeserved communities. Onto the governance, we rate NMB Bank as strong. NMB Bank benefits from a well-established board structure, which is also supported by special audit, risk and compliance. We also have its capital and liquidity ratios strong. Yeah, and that's why the now ESG considerations support our buy recommendations because of all these factors.
Now, every investment has a risk, and so does NMB. But what makes NMB stand out is the fact that it's resilient. So NMB has come up with certain mitigations that has helped curb some of the investment risks as stated above. So some of these mitigations include maintaining a low NPL ratio of 2.9% and strong loan loss provisions. We have diversified income that is used to curb the interest rate risk, quickly adapting to technological changes, maintaining a CAR of 27%, which is actually twice the minimum required, having advanced security systems, and employing cost efficiency measures to curb the expense inflation risks. Now we have the Potter's 5 forces that actually strongly support our investment case. The threat of new entrants is low because their entry barrier is high, and NMB faces high competition from CRDB, but it has dealt with this by having an extensive nationwide network.
To conclude, we have seen that our buy recommendation is not just a smoke in the wind, but it has been strongly backed up by strong fundamentals based on NMBs being highly undervalued and also showing a stable profitability and reliable dividend bank and an ESG leader in the industry. Thus, our strong buy recommendation with a 20% upside potential with an implied dividend yield of 5%, bringing the total average return to 25.5%. Thus, that is our presentation. Thank you. We welcome your questions.
Thank you for your presentation. Based on your industry analysis and research, what upcoming regulations do you foresee there being in Tanzania, and how do you see that affecting the bank's performance and eventually your recommendation?
Okay. So based on the regulatory requirements, changes, yes. So we foresee that based on the recent political shocks that the country has experienced. BOT might increase their minimum required standard requirements, maybe for CAR and liquidity ratio, maybe from currently at 14, sorry, to maybe 16 or there. And in any adjustments whatsoever they decide to make, NMB is well positioned based on their current CAR, which was mentioned by my fellow colleague, which is double whatever they have. Thus, they can easily be able to absorb shocks based when they come, and when changes made by BOT, they won't have an immense impact on NMB based on its current positioning at the moment.
One more question. That was a good presentation. So in regard to the digitization that NMB is doing, would you say, or rather, what stage would you say it is at? Is it mature or not yet mature? And if it's not mature, would it affect the current NPL ratio?
It is not yet mature, since we have digital platforms such as the Super App, which is still in development.
Also, to add on to that, in terms of maturity and how it affects the NPL, in as much, okay, they have digitized much of their transaction, currently 96%, and what is pending is their Super App, as mentioned, which is in their strategic objective for the 2025 to 2030 vision. However, how that affects its NPL ratio, with that there will be more, when that is kept into place, there will be more efficiency into the bank in generating, in offering loans to people. One, okay, it may go both ways. If it isn't highly well regulated and assessed in terms of loans provisioning, not loans provisioning, but rather loans advances to people, it's well not regulated and assessed, they may experience maybe a high default based on digital loans not being properly assessed. But if that is in place, that is a very good thing. And NMB has already, with the 96% transaction being digital, it has showed that they can manage in offering credible loans to people that are well backed, and thus lowering their NPL ratio, seeing if this year it lowered from 2.9 to 2.5%. So yeah.
Also, to add on that, currently NMB has an 96% digitalization, yet the NPL ratio is still low. First, NMB has a sustainability committee, and also they assess the credibility of customers before giving out the loans. Therefore, even when the percentage of digitalization is increased, I believe that this credit assessment, NMB will still use them. So therefore, the NPL ratio will not be highly affected. Thank you.
good afternoon once again. Well, this is Group L. My name is Billy Okoth, and beside me are brilliant minds. We've got Nisa and Sharon. We'll be taking you all through NMB Bank, which is a traditional bank. Tanzania, abilities and capabilities of a fintech because of its digital infrastructure. Okay? Well, we issue a buy recommendation of NMB Bank, a target price of 10,200, indicating an upside of 12.7% and a dividend yield of 4.7%, yielding to a net return of 17.4%. Our investment case rests on three structural strengths. One, we have the market leadership, where the NMB Bank holds 23% market shares and contributes 30% of the sector's profitability. Two, we have the digital efficiency, and we can confirm that 96% of the bank's transactions are now conducted digitally with a cost-to-income ratio of 38%. And finally, we have the asset quality resilience, where the bank has maintained a non-performing loan ratio of 2.9% and a capital adequacy of 27%, providing downside protection. Well, these factors positions the bank as a high compounder in both income and growth characteristics. We want to confirm that the primary competitive advantage of NMB Bank is in its distribution. And we are talking about 240 branches, 715 ATMs, and a nationwide agent network called Wakala, which have had 62% rural reach penetration. In 2024, specifically, Wakala earned NMB Bank 1.54 new customers. This reinforces the long-term deposit strength. So you would agree with us when you say that you'd agree with us when you say that this is a powerful combination of scale, cost leadership, and customer stickiness that creates a wide economic moat. Now, allow me to just mention that NMB financial performance is reflected in the strength of its business model. Look, we are talking about an ROE of 25.5%, which is way above the cost of equity that lies around 21%. I also mentioned the quality increasing with decrease in non-performing loan ratio. And here's the interesting part, that the non-funded income now composes of 25% of its total revenue. So good people, in our humble opinion, buy. Thank you.
Right. So in terms of our valuation, we utilized multiple methodologies: relative PE ratio, residual income method, as well as DDM. Residual income method was our anchor methodology, whereas DDM was our floor. The three of them gave us an initial valuation of 8,840. However, I'd like to make you aware that this valuation was done late 2025. That was before Q3 financial results. At that time we were doing this valuation, the market had priced NMB at about 5,350. So our initial valuation of 8,840 already indicated that NMB was a strong contender for a buy proposition. Once Q3 results were released, we noticed a 1.7 trillion asset surge, which indicates us an 80 EPS growth, which is comparable to 2024 numbers, which were 19% earnings growth. That means in 2025, it is likely that EPS will grow 18%. When we factored this into our valuation model, we got a target price of 10,200, which is what we are recommending as of now. At this time of valuation, the market had not yet fully priced in the had not yet fully priced in the asset surge. Our key assumptions for the CAPM model were 14%, 0.9, and 8%. We were quite tough in terms of the market premium, and that's because Tanzania in general is a frontier market. And we want to say that despite all our toughness in terms of the risk premium, it still gave us a buy order in terms of the upside. And so we're trying to say that for value investors, income investors, or growth investors, NMB is a tick for each of them, because in terms of its fundamentals, it's pretty strong. In terms of its dividends, its previous payout ratios were 33% at 5% dividend yield, as well as its growth potential in terms of its digital infrastructure, indicating that NMB offers compelling upside. In terms of its peers, my colleague has already mentioned its best in class capability in key metrics like cost to income and NPL, as well as on equity. But I'd like to focus specifically on NPL as compared to regional peers. NMB Bank outperforms pretty much every other regional peer in East Africa. Other than Stanbic Bank Uganda, which is an international franchise, NMB Bank beats the rest of them in terms of ROE, 25%, as well as non-performing loan ratio at 2.9%, against a recommendation of 5% by Bank of Tanzania. And lastly, I like to mention the fact that their earnings are not based on leverage. At 5.57 times leverage, it is not as over-leveraged as its peers, which are above 6 times. And at a net profit margin of 40%, it indicates that their return on equity is sustainable as compared to their peers.
Hello everyone, I'll take you through the risks that NMB Bank faces. So first we have credit risk. Likelihood of occurring is medium. The impact will be high if it occurs. The overall risk level is medium high, and NMB mitigates this through having a diversified loan portfolio in agriculture, SMEs, and also businesses, and also conservative provisioning to absorb losses, hence profits are not interfered with. So secondly, the macroeconomic risk. So the likelihood is medium, the impact is medium high, overall risk level medium, mitigation. NMB has strong capital buffers to absorb losses during economic turndowns, and deposit funded model, so they don't have to source funds from external sources. The interest rate and magic risk, so the likelihood is medium, impact medium, overall risk medium, mitigation, they have a high current account and savings account ratio, which again prevents them from sourcing funds externally, and cost efficiency through digital channels and branch optimization. Liquidity risk, the likelihood is low, impact is high, overall risk level low, medium, mitigation. NMB has because they have highly liquid assets, and operational and technology risk, the likelihood is medium, impact medium, overall risk level medium. So as much as 96% of NMB's transactions are digital, their IT and cybersecurity system is good. Regulatory and compliance risk, likelihood low, medium, impact medium, overall risk level low, medium. Mitigation, they have a high capital adequacy ratio of about 17%, which is above 10% that's required by the regulators. And lastly, market and valuation risk, likelihood high, impact medium, overall risk level medium high. Mitigation, they have attractive dividend yield, so they have a diversified investor base to attract key investors like the government of Tanzania and National Investments PLC. Moving on to ESG, environmental.
Well, thank you very much. Looks like we've been caught up with time, but we were a little bit in-depth in our research, and now we'd like to welcome any question that the floor has for us. Thank you. Any question? Okay. Good. It looks like we've done a very good job from the floor's faces, and we just, in case there's anybody who wants to close for presentation.
Yeah. Just to confirm, there are no questions from the judges. Oh, well, thank you so much, and yeah, we still recommend that NMB the great buy. Thank you.
Good afternoon, ladies and gentlemen. This is Team G. My name is James, alongside Lucy, Catherine, and Esther. Our analysis combines microeconomic insight, industry dynamics, and rigorous financial modeling to support a clear investment recommendation buy with a target price of Tanzanian shillings 9,400. That represents an upside of 15%. NMB Bank started in 1997. It is listed in Dar es Salaam Stock Exchange. It has extensive branch networks ATMs, agents, and digital banking. It is the second largest commercial bank in Tanzania. It has segmented its markets into retail, SME, corporate banking, digital banking, and agribusiness. Retail leads in terms of loan, deposit, and customer numbers. When we look at the industry overview, we find that we find that commercial banks in Tanzania hold 88% of the total assets, while the major commercial banks, the two of them, that is CRDB and NMB Bank, hold 47.5% of the market share. The sector profit grew in 2024 to 40%, with industry NPL ratio moving to 3.2%, hence enhancing quality of the asset. In that context, we turn to industry structure and why NMB Bank leads.
We conducted an analysis of the SWOT and found out that the NMB key strengths lie in strong market position, high operational efficiency with a cost-to-income ratio of about 40%, low NPLs, and a wide Wakala branch network. All these key strengths bring about financial inclusion and SME growth. However, the weaknesses include reliance on the Tanzanian market and money mobile substitutions. Following the SWOT analysis, we also considered the PESTEL analysis, where Tanzania offers political stability, economic growth, rapid digital adoption, also a strong regulatory framework. Considering the Porter 5 forces, the industry rivalry and the substitute is high due to mobile money substitution and also competitive pressure from other banks like the CRDB Bank and fintechs. The threat of new entrants is low due to strong regulatory standards and high capital requirements, while the bargaining power of customers is moderate to high, showing that the customers are able to switch from one platform to another at low cost. We move on to why NMB wins. The NMB is the second largest bank in Tanzania by deposits and loans, showing its strong market presence and also an extensive distribution network, strong digital capabilities, and strategic focus in retail and SME growth. All this show efficiency and resilience of the NMB Bank. For investors, they are able to see why NMB has controlled risk management and a sustained growth. We can now evaluate the ESG.
NMB Bank ESG isn't just a reporting requirement. It is core to business resilience and national building mission. NMB is a green finance pioneer as it finances green finance, as it finances green finance and also reduces carbon footprint. In terms of inclusion, NMB Bank has managed to offer digital banking and agency banking throughout its branches. In terms of governance, NMB Bank has managed to have a strong board oversight that is headed by a female CEO. In terms of risk management, NMB Bank has managed to maintain an NPL ratio of 2.9% and also has managed to offer diversified loan portfolio. Over to financial analysis.
Over the last 5 years, NMB has demonstrated resilient earnings expansion driven by co-lending activities and diversified non-interest income. So, most importantly, NMB has generated a return on equity of approximately 25% and a cost of equity of 19.5%, confirming that NMB generates value beyond the investor required return. So, this performance is supported by improving operational efficiency. Our cost-to-income ratio sharpened to 38%, driven by a digital massive shift. Today, 96% of all digital transactions, of all retail transactions, happen outside of the branch. So by leveraging digital scale, NMB has decoupled revenue growth from operational cost. Our non-performing loan stands at a healthy 2.9%, creating what we call a downside protection, a buffer that keeps us profitable even when the broader macroeconomic environment gets tough. In 2024, NMB issued the Jamis Sustainability Bond on the London Stock Exchange, reaching an oversubscription of 284%, raising over 400 billion Tanzania shilling against the target price of 75 billion Tanzania shilling, proving that international institutional investors see NMB as a safe, high-impact gateway into Africa's growth. Having secured that global capital, our visible earnings trajectory shows a clear pathway to our 1.3 trillion Tanzania shilling in the net profit by 2031. So this forecast is driven by two structural pillars: aggressive loan expansion into the high-yield SME and creating a capital buffer that is strong enough to fund growth without compromising our balance sheet. So in summary, NMB presents a unique trifecta: record-breaking profitability, digital efficiency, and long-term capital growth. However, strong fundamentals alone do not justify an investment. A valuation does. So we therefore applied a multimodal approach and to determine the intrinsic value of NMB and also assess whether the current market price presents an attractive entry point for investors. We applied a 60% weight to the residual income model, as it directly captures value beyond excess returns. As NMB generates a return on equity of approximately 25% and a cost of equity of 19.5%, it produces a positive economic spread of about 5.5%, confirming that NMB generates value beyond investor required return. We then validated our result through the dividend discount model and relative valuation multiples. When viewed through our valuation football field, it shows valuation convergence. The market price of 8,150 Tanzania shilling sits towards the lower bound of our valuation range, and the target price of 9,400 Tanzania shilling indicates an immediate upside. So the difference between these two prices is a clear signal that the market is currently mispricing NMB's structural efficiency and digital scale. We stress tested the bank under our bear case scenario, stimulating high inflation and suppressed growth. Our sensitivity heat maps confirms this. Even if the cost of equity fluctuates or growth slows, our digital first cost structure and the low non-performing loans of ratio of 2.9% creates a powerful buffer. So we then went through a 10,000 simulation, Monte Carlo simulation, and found that 70% of outcomes exceed the current market price. So the math is clear. The upside probability fundamentally outweighs the downside risk. Putting this together, we arrived at a target price of 9,400 Tanzania shilling, presenting an implied upside of 15%. So we therefore issue a high buy conviction, and we also recommend this stock for any type of investor, whether you seek to invest in passive income through dividends or through long-term capital growth. NMB is the place for you to invest. Thank you.
Thank you for your presentation. There's a slide that you have that has net profit projections. Go back. Yeah, could you just take us through how the assumptions that you used to arrive at the projections?
We used the residual income model, and we also used the dividend discount model to cross-check our results. And that is how we arrived at 1.3 trillion Tanzania shilling and the net profit of and a target price of 9,400 Tanzania shilling.
Hi, thank you for your presentation. My question is on the weighting for the valuation methods. Why did you choose to do 60% for the residual income approach?
We chose to do 60 on the residual income because it directly captures value through excess returns, and through value creation, it also gives us a spread of 5.5%, showing that NMB generates value beyond investor required returns. Yes.
So my question is in regards to the ESG. How does NMB Bank integrate ESG principles into its core strategy?
Okay, NMB is key in supporting green finance and solar energy, and also it issued a NMB Jasiri bond that which aims aligned with waste management, including financing women-led enterprises, so that they can advance the Tanzanian economy, as the women in the country generally are the key yeah.
Just to add something on that, we see that NAB Bank, one of its segments is agribusiness, so it participates more on the green economy, and also that aligns to the current debate that we have globally, which is we are talking about the climate change. So it focuses a lot on sustainability of the climate change. Thank you.
You mentioned a few of weaknesses in the SWOT analysis. Maybe just to tell us what they are doing to improve on those specific weaknesses.
In the chart of the SWOT analysis, where you can see, for example, reliance on the Tanzanian market, the NMB Bank is able to innovate in digital innovations to bring more customers, and also interact with international investors to reduce dependency on the market. And also with industry competition, instead of competing with the banks, they can do partnerships with those banks to improve and have profitability.
Wow, let's give them a loud of applause. And everyone else who has presented. Goodness, we have brilliant, capital market analysts. This is so exciting. So, this is not the time for stories, because I know all of us are hungry. It's time to go and have lunch, right? So if I speak too much, I know you'll be like, James, we are hungry. So we'll be here we want to proceed out for lunch for the next 1 hour, but broken down into 2. 30 minutes lunch, then for 30 minutes, we'll be having teams photos. So you will liaise with our media team, they are at the back. So we'll be having photos for the team. So 30 minutes lunch, it's at the first floor, just the floor below, right? And then we'll be here for the group photos, and then in an hour's time, we take off for the last session. We are good? Yes. We need to really, really rush. But then enjoy your appetite. Or is bon appetit? What do they say? So it's first floor. Just write down.
the relationship between me and having him sit down at the vile nilianza sio vile niko sahi. There is a very big improvement. Sababu ile stock nilikuwa na sahi, ukiangalia stock iko juu na niko sawa, customer hawezi kuja kwa sababu ya hii support napata kutoka kwa Avenue. Na recommend Avenue sana sana.
Ladies and gentlemen, if you can hear my voice, please let's walk inside. Those who are still taking photos from my far right, that should be in the hosting room, please let's walk in. If you're still outside, please hurry up. We are waiting for you so that we can proceed. Okay, if you can't see your neighbor who you were with before and you cannot trace them in the room, just try to signal them from wherever you know they could be so that they can join the auditorium. Thank you, thank you. We are almost there. I can see a few faces outside. Please, we kindly request you to step in. The energies are back. Do you not have the energy to push for the next couple of for the next session rather? You are right. Great. So we want to start. Thank you so much again for your patience, and I know you have enjoyed the lunch. And if you have a feedback about the lunch, you can always reach out to us about how the lunch was for future experience and so on. So we are about to do we are actually at the tail end. So I just want to make an announcement. Again, as I said in the first announcement, every grading we do, we are not doing it to disqualify what you had done. No, it's just in every competition and in every kind of such an arrangement, there will always be a particular arithmetic. Maybe for the teams that I had already called out, there's something I mentioned to the rest of the teams that was in here that I didn't tell you, which I think it is important I mention. Our grading system then was an average between what the graders had scored you and what the judges had scored you. So it was an average, and that's why we had 7 groups. Now, out of all those 7 groups, we also have now 3 last groups, which I'll be calling out. So when I call out these groups, we will dispatch one to this end, Two, we will dispatch them outside, one on this side, the other one on the other side. But prior to your leaving, one of the judges will ask you a question, which you will go and brainstorm for about 5 minutes. And then you will come and answer the judge what exactly the answer is for what they will have asked you. So the following are the teams. Team I. Where are you? Let us celebrate them. No, just hold on there before you leave because the judges need to ask you the question. The next team is J. We can give them a loud of applause. I just want to confirm that those teams are in because I can see some empty spaces. J, where are you? Okay, you're here. I is there, fine. And finally, it is Team F. Where is Team F? Team F, just to be sure you're in the auditorium. Thank you. So I'll invite one of the judges to pose the question. Then after that, Team F will go at this whatever the hosting room. Then I and J, I here, J down there. So one of the judges, please.
Hi everyone. I think also just to echo what he's saying, everybody did amazing, and it's nothing short of you being very, very intentional about your careers and about your futures to be in this room. So even if you're not on this last panel or you're not going to compete for this last round or even going to quote unquote win, I think there's some winning you've done today. for try, I wouldn't be cheesy, but yeah. So for the question that we have is because also we have had all of the financial performance, we've listened to your evaluations. So what's left now is a 5-minute presentation. So we'll give you a break, I think, of 5 minutes as well to go and prepare. So the question is, if I'm an investor, these are your clientele seated here. We are your clientele. So come and convince us whether to do a buy, a hold, or a sell. So be creative because we've already heard about the financial performance of the company. We've had a lot about the company already. So how would you win over a customer? Yeah, that's the question. Thank you.
Let's celebrate our judge. So Team F, we have all had the question, including all of us, the audience who will be listening. So Team F, please proceed to my far right, which should be your left. Then I, to my far left, at the top of it, and then J, to my far left on the lower side of it. Great. Let us celebrate them as they make their way out. So in fact, we want to. So to the teams that are out, I, J, and F, it's 5 minutes. Right now, it's exactly 7 minutes past 4. So exactly 12 minutes past 4, we'll be calling you in. So brainstorm and come and convince our judges why, if they should buy, hold, sell, or none of the above. So we give them a commercial break of those 5 minutes. You can be saying hi to your neighbor in the meantime. Otherwise, if I engage too much on the mic, I might interfere with what they are saying out there. So if you don't know who you are sitting next to, just ensure you know their name, why they did what they did, why they used the evaluation model that they used, and what are the pros and cons. So just engage whoever is your neighbor there. So our teams I and J, we want you now to move to the far end, to the hosting room. The 5 minutes are over. Please let's go to the other side. Excuse me. Please let's move to the hosting room. So just want to be sure that Jay has also went to the other room so that now we can start. So Team J, don't just go too far because I'm just calling you up. Just don't go too far. So are we ready to start, our judges? Excuse me, judges, we are good to start? Yes. Excellent. And the audience, we are ready to listen to our teams? Thank you. So Team J is coming in just right now. So Team J, please proceed. Yep, please come in. Please take the stage. Ensure to remember the question that the judges asked, and that is what you're going to answer. You have 5 minutes, which starts now. Proceed.
Good afternoon. Thank you for coming to this client meeting. Officially, we are Team J, but to you, right now, we are Dividend Dynasty Consulting. Thank you for trusting us. So, Karanja, I have a question for you judges. What type of investors are you? I want a single answer from you. Either risk-seeking investor, non-risk-seeking investor, or medium risk. What type of investor? Okay.
let's assume you're a medium risk investor. So with a medium risk investor, investing in NMB will provide you plenty of upside with a lot of downside protection because of the opportunity of growth for the company. One of the most strategic assets in the banking industry in Tanzania, allowing us to achieve a growth percentage year on year out with a constant growth within the industry. So the macroeconomic why. Why would you invest in Tanzania and in particular NMB Bank? They are the second largest bank. They offer you stability and a 26.9% upside on your equity investment. So another question we will pose to you, or rather let's assume you're an impact investor. You like green financing and ethics. They tend to invest in sustainable financing, for example, empowering their biggest credit customers in the agriculture sector by funding their drip irrigation systems, effectively making them more resilient at paying back the debt. So that could be interesting on your part. I'll hand over to my partner, Matthew. Mandatory.
National Microfinance Bank, close to you, literally meaning close to you. In terms of our female panel here, National Microfinance Bank supports women under the Jasiri Social Bond, and under this initiative, women are empowered and are allowed to scale their income and grow. So National Microfinance Bank isn't just based on profitability. Yes, they make high returns. Yes, they are the highest profitable bank in Tanzania, but they also care about long-term value creation as well as the longevity. So if you are an investor who is interested in sustaining your investments to last for a long time and to grow over time, then I would recommend you to buy National Microfinance Bank, because you create long-term value. If you want to invest for your children and your children's children, National Microfinance Bank is the bank for you.
So now, addressing the elephant in the room, of course there is nothing like free money. Everything has risk involved in it. Now, investing in NMB Bank does also pose its own challenges on the side of risk. There will be certain macroeconomic factors that will possibly reduce your earnings, but we can inform you that the bank has taken the necessary measures to actually hedge your investments and build a very strong balance sheet that will ensure that your earnings are protected over time. Of course, we're selling this as a long-term investment option. This is not, okay, even short-term it will work, but long-term, this is a good way to go for you. Your money will be protected and you can be sure that your returns will be safe with this bank. Yes.
And be you an institutional or retail investor, with different needs such as income, dividends, or capital gains, we assure you that they cover both, and you will be in good hands. And as well, you might wonder, how much is there to gain? By our projections, if you invested 1 million shillings for one period financial year, you should be generating 269,000 shillings, Tanzanian shillings, if you invested 1 million Tanzania shillings. So that is what is in there for you as an investor. Invest with us, NMB Bank. Thank you.
Now, it is important for you to buy NMB shares, and this is because I'm sure you'd want to put your money in a bank that has over 9 million loyal customers, has a very low NPL ratio of 2.9%, and has over 63,000 agents and an extensive network of branches and agents. Yeah.
Now, I know you're wondering about what return you'll get in this investment. A local bond will give you only a 10.75% return. However, in this investment, you'll generate over a 20% return in average return with a dividend yield of implied 5%, leading to a return being 25%, a 15% upside compared to the local government bond available. Not only are you investing to just any mere bank, but a bank that will help you mitigate the risks. I know you're wondering, what about the risk that this bank is giving me? Well, hear what my partner has to say about that.
So, as an investor, I know you're wondering about the risks you might face when investing in NMB Bank. Let me shock you with the macro environment of Tanzania, whereby the inflation is at 3.1% to 3.3%, and the GDP is growing at 6%. So you only need 4.3% average return so that you can be at break even.
You want to know how the bank impacts the society, the environment, and how it is governed. Well, NMB Bank has provided Jamii Sustainability Bond, which finances the green finances, which is a sustainable, which finances the agriculture, and also we have the Jasiri Bond, which provides funds for the women to support the women enterprises. We also have NMB standing out as with a scale financial inclusion, which allows for many people to access funding using low cost, and therefore will be able to have a lot of customer base, which reduces the cost of funding. We also have the NMB Bank also has a top tier governance because it has a well structured governance, and therefore it is able to create it is able to bring about requirements that can make the bank stable. That is through the capital adequacy ratios, which is already high, and also the liquidity ratios. And therefore, our ESG consideration supports our by recommendation by limiting downside risks, improving funding access, and also strengthening long-term franchise durability. Thank you.
Yeah, and they say companies fail because of the people leading them. And this company is being governed by the top of the top in the industry, with David Nchambi being the chairman of the board, having a 20 years experience, thus bringing that expertise into this bank, not only to making it fail, but to making it thrive and sustain for the long term, with projected 2030 visions, strategies in place of digitizing their systems more and more from what they have been doing over and over the years. Thus, solid fundamentals in place, proper governance in place, it already being an ESG leader, winning Euromoney awards 11 times out of the 12 times that it has been there. I'm telling you, there is no other bank like this. You need to buy. You need to buy. Thank you.
Testing. We start when you're ready, Ama. Good afternoon. This is Timaya again, and we're going to take this question of why invest in NMB by answering 3 quick questions. Why Tanzania, why the banking sector, and why NMB? So, We are Africans and African is our business. This is the golden age of African investing, with the markets globally becoming more risk-off as interest rates have progressively gone down from COVID. And secondly, there is increased retail participation in the stock markets across Africa, evidenced in Tanzania by a recent oversubscription in the East African ETF that they recently launched. Secondly, why Tanzania? Tanzania is a rapidly and sustainably growing economy with private sector credit growth at around 18%, NPLs among the lowest in the region at 3%, inflation also around 3%, and the GDP is growing at 6.3%, which is at least, at minimum, among the top 20 in Africa. And we're seeing these values already being recognized. A quick check at any of your stock screeners will tell you that in January alone, the Dar es Salaam Stock Exchange is only second to, I believe, Egypt as the best performing stock market in Africa at around 18%. Julian?
So I'll take you through why the banking sector. In Tanzania, the banking sector assets make up less than 30% of total GDP. In comparison to peers such as Kenya, where this figure is at 50%, and even in developed countries where this figure is greater than 100%, we see that there is clear room for growth. NMB's resilient business model and superior distribution supremacy set it up nicely to take advantage of this opportunity. That is why we issue our buy recommendation for NMB.
Now, dear investors, I'd like to take you back to January 9th this year, where something happened that is going to shape Tanzania's capital markets. On January 9th, there was an announcement publicized by the European Union that Tanzania had been delisted as a high financial risk country, matters anti-money laundering and counter-terrorist financing. Why does this matter? When they were listed, they are often subjected to high due diligence, especially with cross-border flows, which increases costs for foreign investors. And the market reacted well to this. If you look at the Dar es Salaam Banking, Finance and Investments Index, it has been up 50% since that date. And now looking at the key players in that index, it's NMB, CRDB. And we've already shown you the financials. NMB is beating CRDB almost everywhere. So in this race, NMB is winning, and as your analyst, we'd want you to bet on NMB.
And finally, but before I finish, so looking at the ESG, I've talked about the environmental side. You've heard a lot about the bonds. You've heard about financial inclusion. You've heard about 69,000 Akala agents, which I know Akala is a name you've heard all day. Let's now focus on governance. So first, the Bank of Tanzania Sustainability Guidelines give a competitive moat for NMB. So strategically, NMB's TCFD alignment protects our target price from tailed risks. By doing climate stress tests on the agri portfolio, our bank is not just reporting on climate change. They're protecting our value through avoiding tail risks. And then most critically, the NMB's environmental and social risk management framework screens 100% of the 8.5 trillion Tanzanian shillings loan book, hence, which is the primary driver of our sector-leading 2.9% NPL ratio. And finally, NMB is forward-looking, having mapped out Scope 3 emissions prior to the deadline, which is at 2029. It doesn't have to go through all the compliance costs that peers are currently suffering from. So that supports and backs up by recommendation.
Finally, feeding into the why NMB, I look at the most weighted merit, and that's the strong capital position and their well-buffered liquidity. And I'll focus on the 2025 financials. We've seen a capital ratio of 27.2%. But what does this exactly mean? This means that for every 100 Tanzanian shillings of risk-weighted assets, you get 27% in supplementary core capital to supplement your loan deposits and cash requirements. Now, how does this look like for our loan book? In 2024, our loan books were 8.25 trillion. And in 2025, we had 10.24 trillion. Now, this, of course, is backed by the enormous growth in the digital sector that was mainly driven by the NFIs in digital income and, of course, micro-lending. But even with the drastic growth in micro-lending, you'd expect that this would expose them to risk to non-performing loans. But this also serves as a reminder to show that they're efficient, because not only did their non-performing loans reduce from 2.9, it reduced all the way to 2.6, serving efficiency in terms of their capital ratios and their liquidity. That's important for you as the investor, the consumer, and even we as the recommenders. So basically, in short, what I'm saying is it's no longer a question of why the banking sector or why NMB or why Tanzania. It's why don't you have a seat at the shareholder table? And we recommend a buy. That's Team I for you. Thank you.
Let us give them a lot of applause. That includes even the teams that has presented before. I think that should be J and F. So let's celebrate them all together. Cool. At this juncture, I actually want to release our judges for only 2 minutes to make a few deliberations, and then they will be back shortly. So judges, please, you can use whichever, either on your right or on my left. In the meantime, I want to welcome, we have our board members present for CFA East Africa, so let us put our hands together and welcome Happy to make her remarks. Welcome, Happy. Let us celebrate her again. Thank you.
Thank you so much. Good afternoon once again. Today has been a long but full day. Even as we wind up, as we wait for the judges to do their final deliberations, I just want to give a vote of thanks. Thank you to all the participating teams. I know the work you have done. The work you have done has been a lot. I know you worked over Christmas. Thank you so much for all this. I'm hoping that you learned something. Personally, I learned as well. So thank you all. To the faculty, advisors who help the students, thank you. To the mentors, to the judges in absentia as they deliberate, thank you so much. Organizers, the CFA Society, East Africa, the volunteers, everyone who has helped today a success. Thank you so much, and hoping that you can continue with this spirit of nurturing the next generation of financial analysts, the next generation of investment professionals, people who have ethics in the financial market. I also want to thank the sponsors today, CMA Uganda, the Ethiopian Securities Exchange, the Bank of Tanzania, the Dar es Salaam Stock Exchange, Exodus Advisory, Finaco Hub, and the company you're all looking at today, NMB Bank PLC. Thank you for making this event a success. Thank you all. I hope you have a good rest of the day. And to the teams, just by participating, you're already a winner. Yes, thank you and all the best.
Thank you so much, Happy. Thank you, thank you. Let us appreciate her as she takes her seat. And our judges, we are waiting on you. Your 2 minutes are almost over. But I hope you have learned today, haven't you? From your own presentations and from the presentation of your colleagues. I believe all of us have learned, as I had said earlier, there has been a cross-pollination of thoughts across and amongst us. And whatever we've gathered and we've gained from everything that has been happening today should not stop at this evening. You know, it's a going concern. I said, if you could remember my earlier remarks, that, I mean, you guys are, you are great capital market analysts. I mean, great investment professionals, and this is just incredible. This is amazing. So just go and continue firing it up. Today it was the bank in Tanzania. Tomorrow could be the bank in Kenya. And the general capital markets space. You've done research for purposes of this competition. Go and challenge yourself within the, as many as you could access capital markets, just to see how you could buy, if you could sell, or if you could hold, if you were an investor, right? So it was a great evening. To our judges, just give me a second. Yeah, they're almost here. I had asked you a question previously. Did you ask your neighbor what they learned? Did it sound unique to you? Or did you even know the name of your neighbor? Or your neighbor is your group member? Right? So even as we, because I'm about to, once the judges are here, I'll be almost winding up. I am so happy to have been your moderator today. It was just amazing. I am James. I think I had mentioned that earlier. I'm an actuarial professional, and it is amazing to hear what all of you have. And we wish you really well, even in your subsequent endeavors, in your career, and the schools you're representing, and so on. I mean, this is just incredible. So just go and transfer what you've acquired today to that person who wasn't here, right? It's beyond you. It's okay, you could have consumed the information and whatnot that you've gathered from here, but go and spread that to as many that are within your circles so that they can benefit just as you have benefited. Did all of us manage to do the team's photos? Let me see by a show of hand, the teams that managed to have their photos taken. By a show of hands. Okay, this is one team, that is another team. That is another team. Only 3? That's another one? Okay, fine. I think, let me flip the question. Which teams didn't manage to have their photos taken? By a show of hand. That's one team, 2. Oh, quite a number. 3. So about 5 teams, right? I think that would be necessary just immediately after this. Just make arrangements. Yeah, on my my immediate people are signaling me where that would be happening. And let us be fairly quick in doing that, because I understand there will still be some other events that will be going on at the same location. So just right after this, let us proceed to my far left, which should be your right based on where you're seated. And we have those particular teams' photos taken. It is important that we do that. So right after this, if you know you haven't been taken, please let us coordinate ourselves very fast. Let us not waste much time. So that we can finish this on time. Okay, our judges are almost coming in. Yeah, those certificates you are receiving, they are part of appreciation. In fact, as it was my throughout culture, please tap the back of your neighbor and tell them, good job. Yeah, tap the back of your neighbor and tell them, good job. And actually tell them to keep it up. Knowledge is transient, it keeps on growing. Actually, it should grow exponentially, so that's a recognition amongst the many things that we have recognized you here for, that indeed you have done a very, very good job. maybe your people from the sound team, you can give us a short number while we wait for our judges to put themselves together. Okay, cool. Let us celebrate our judges as they march in. They have done an exemplary job today. And I think I'll ask one of them not to just sit, but just to march forward. Whoever is just don't sit, just march forward. And we hear what she has to tell us. Welcome, Susan.
Good evening, everyone, once again. We have come to a very tough decision. And maybe just a disclaimer. Don't attach my face to don't attach my face to the results that I'm about to announce. You see me by the CBD and you're like, that one. No. Everybody has really won. You have all done a very good job throughout the day. And even getting to this level, I know you have really put in the work. Our former president used to say there are times somebody will just stand at the podium and they're shaking, sweating. So just getting that confidence and maybe moving up to this level, you have really done a very good job. So we are all winners, but we need a winner that can represent us to the sub-region level. So we as judges, we came up with the winner and the first runners up and the second runners up. Are you eager? Are you curious? So our winner will be Team I. Clap for Team I. You have really done a very good job. But as I said, we are all winners. And as judges, we trust that that team is going to represent us well in the sub-region levels. And we believe we can also get to the global level. So we are putting our trust in you. Our first runners up, we have Team J. Clap for them. Team J also did a very good job. This was a very tough decision on us, especially on your presentation skills. Would recommend that you work closely with our winning team to just share some or shed some light on how well they can work on their presentation as well so that they represent us really well. And our final team would be Team F. Clap for them. They also did a very good job. So well done. Let me take the mic back to the moderator, James.
Thank you, Susan. Let us appreciate her. And please, just to emphasize, remember she said we, not her, right? So don't point fingers when you are in town. You're like, that lady. So, but all of us are winners. Congratulations, everybody. I want to invite David, one of our board members, again, to proceed with the awards. And thank you so much. I've been your moderator. See you next time. I'm James. Let us welcome. Let us celebrate David as he comes forward. So let us celebrate the team also as they march forward for their awards. Let us celebrate them again.
Hello, everyone. So finally, you can find out the identity of the winning team. This is Strathmore, Team A. Congratulations.
Subiri please. Subiri kidogo.
Mercy from Strathmore. Both. People are probably wondering who Mercy is. Mercy is a representative of the university standing in place of the faculty advisor. Yeah? So she will be receiving an award on his behalf, her behalf, his behalf. So in addition to these beautiful plaques, they also get some money. They The check is big. The amount is the amount is the amount. Anyone from Strath? All right. So it gives me great pleasure to present to you guys. Oh, sorry, the rest of the board. Yeah. You're adding some zeros there.
Let us celebrate them. So congratulations, Team Strathmore. Let us celebrate them one more time. Congratulations, congratulations.
Hi. Hello, can you hear me? Sorry, I just wanted to say something because I've been thinking about this moment for a while. Not gonna lie. Yeah, I've been thinking about this moment for a while. I don't know how great competition. Thank you to the judges. To be honest, I just wanted to say that's Victor Mwangangi. This is Preston Muthi. This is Julian Kiplagat. This is Neriaki. If we are all just about to start fourth year, if you need someone to pay big salaries to do good work for you after fourth year, these are the guys to look for. Thank you to the Strathmore faculty for this. I feel like I'm fanboying too much. I'm sorry. I'm just so excited. But yeah, look for them. They'll do a good job for you. If you have space, come for me. There's a great Strathmore team on this table. There's a great Strathmore team, Pale Nyuma. And yeah, thank you to the judges. That was the most nerve-wracking thing ever. But yeah, thank you.
I'm just here to end the day. I've been your coordinator, Grace Wangoinjiru, Society Manager for CFA Society East Africa. So if you want to walk this journey, always feel to call us. We will guide you, we'll support you. And yeah, you're welcome to our community. It's been a pleasure. Thank you, judges. You guys are awesome. For further photos, we will go outside to the terrace and have our photos, any videos you'd want, but the hotel needs us to clear this room for the next session. Thank you very much, and I'm glad you came today.
Thank you.
Yes, and please pick your certificates as well, Msidziache. Everyone has a certificate.